Welcome back, everyone. Let us continue. Good that some of y'all came before time. I know to which your reaction is, sir, samjha kuch bhi. Really? Last ka little because of you, SOP. But the only thing you understood in the budget was SOP. Hello? Now stop making stupid predictions. That's a new regime and old regime. Because one thing, please understand, she hasn't made any change to the old taxation regime. So there are stupid people on news channel. Bindas, they are saying after the budget got over that uh, these are new slabs of new regime. Plus there are separate slabs. Nonsense they are speaking. Old regime is as it is. New regime they have introduced new slabs like they have been doing last 2-3 years. And there is this concept called rebate. Now, what is this concept called rebate? Supposingly they decide an income threshold for rebate. Okay, I am going to explain this concept in tax rates. If your income is up to this, we are calculating tax as per these slabs. Whatever is the tax that we have calculated, we will subtract that tax and make it 0. That threshold there, earlier it was 5 lakh, they increase in the new regime to 7 lakh. In your exam, it is 7 lakh. Now they have made it 12 lakh. But the point is that if your income is greater than this by any amount, the full tax is applicable. So you saying that 0% tax is applicable till 12 lakh, that is wrong. Further details, we will have to see the hard copy of the finance bill. And plus, yes, a very, very important fact, it is announced that from the next week, she will be announcing the new income tax bill will be announced. So, yes, one thing is clear that the Income Tax Act, existing act will get abolished and a new bill will come. The question is, if a new bill is coming, then what are these amendments? To exactly whom they are applicable? You didn't understand the doubt now. Sir, if you are bringing a new bill, then why you have to bring amendments now? For whom and for what? For a moment, I first thought that these amendments which we are speaking, they are a brief summary of the new bill. That, okay, little summary I am speaking, and then actual new bill will come later. But finance bill has amended lot of sections in income tax. Some TDS ka changes she has. What exactly is she doing? So, like her habit, we still don't understand. Now, in this, now you have, see, yesterday I gave you so much bad news. What a timing. That 23rd July. So you have to learn old law as well as new law. Now, one good news I give you. It is possible that the new income tax bill applies maybe say from 1st October or something. So she has basically amended the law and given the slabs till 30th September. And now from 1st October, new law. That also is prediction. Now, when the new bill will come in the next week will make a lot of things clear. You know, those who are watching video lectures, these video lectures after 6 months, 8 months, 1 year, things will become very clear by then. It is just that today it is newly announced. So, if by chance something like that happens, that new income tax law is coming from the middle of the year, then bro, those who are giving May 26 now, they have to learn the old income tax law and the new income tax law. You just have to learn the old capital gains and the new capital gains. And one more thing, the most important thing, now listen to this, dear students of May 25, September 25 and Jan 26. Also CA final students of May 25, November 25. Anything announced in this budget is not applicable, not applicable, not applicable, not applicable for your exam. This budget will apply, and this I explained at the beginning of your syllabus, that this budget will apply for the upcoming previous year 25-26. That is next assessment year 26-27. So applicable for students giving exam in May 26, September 26, November 26 if CA final, Jan 27. It is applicable for those students. Not a single word that has been announced in this budget is to be studied by. Yes, you have to understand the procedures, the processes. Now a lot of students got a first-hand experience while listening to the budget. That first part of the budget speech, I will give 10,000 crore here, 20,000 crore there, 5,000 crore. That is basically her announcement of income and expenditure. That is part A of the budget. And then, did you notice that statement? I will now move to part B, that is my tax proposals. In this, she took up the indirect taxes wala part first. Generally, she does the direct taxes wala part first. But did you observe that part A, part B? We've discussed that also at the beginning of our syllabus. Budget speech divided into part A, part B. I wanted to give you an all-round practical exposure, practical experience and knowledge, which is why, नीलेश, अभी भी कचरा है अंदर, कितना पानी के अंदर, एक मिनट इधर हाँ. So I wanted to give you a practical exposure. End of the day, everything that is announced in this budget has to be ignored as far as you students are concerned. Now, I am going to be doing question number 3 on the same page as yesterday, because to do question number 3, I have to again and again scroll back to the question 1 and 2. And by the way, this is question number 3 of what is going on. Now come back, huh? Get over auntie. I know that scary image is now in your bro. Isn't she scary in all ways, all forms? Question number 3, that is the two tax benefit. The second tax benefit of what? So we are doing a chapter called capital gain. Capital gain will get triggered when two conditions are fulfilled. Condition 1, capital asset. Condition 2, taxable transfer. Only when both conditions are fulfilled, the capital gain will be triggered. Otherwise, we will not calculate only whether gain or loss. We studied the meaning of capital asset. Then we understood that capital asset will be divided into categories. That is latka and satka. Long-term asset, short-term asset. The gain on long-term asset will be declared as long-term capital gain, and the gain on short-term capital asset will be declared as, that we studied one day before. Yesterday only we did it, no? Long-term and short-term. If your gain is long-term, you are going to be eligible for two tax benefits. So chronology is, your asset will become long-term, then your gain will become long-term. And if your gain becomes long-term, you will be getting two tax benefit. So first question, and this I will ask you in CFI. When does gain become long-term? When the asset is long-term. Next question, when is asset long-term? Till 22 July, we have to see holding period. We have greater than 36, 12 and 24. 3 in 12 listed securities other than unit. Then units of equity oriented mutual fund and zero coupon bond. 2 in 24, that is immovable property and unlisted shares. Everywhere less than or equal to a short term. But if the transfer has taken place on or after 23rd of July, the amendment will be effective from 23rd July. The transfer date has to be 23rd July to 31st March. Then only two categories. All listed will come in 12 and unlisted will come in 24. Equal to will again go in short term. Correct? Hai? Section 50AA. These assets will always be considered as short-term capital asset. Once you are deeming is a forced assumption, deeming fiction, that you will always be considered as short-term. You won't be eligible for any tax benefit. One thing you all understood, specified mutual fund unit, where majority investment is being done in other than equity, so there is no risk. Likewise, unlisted bonds and debentures. See, if they were listed, no, there is still some risk, but unlisted carry no risk. And therefore, as per amendment, there is one more asset here, though not relevant for CA intermediate students. CA intermediate students have to study only these two, but I still want to share that name with you. It's okay if you don't write it, but I want you to know there is an asset called market linked debentures. You know, these days corporates are bringing new and innovative products. Debentures ka perception that we have is they give us fixed rate of return. Correct? Which is that asset class where return is dependent upon market performance? Equity. Because equity ka return is not fixed. If market performs better, so we will give you more return. And if market goes down, then equity becomes risky. And why is debenture not considered risky? Because irrespective of market performance, your return is going to be fixed. So you all know what are debentures. But now corporates have invented a new concept called market linked debentures. Because they are desperate for your money. They are requesting you, please buy debentures from our company. See, if you buy debentures, they will issue, means they will use your money. We will give you fixed rate of interest. That is the main feature of debentures. But then you are like, sir, sometimes you will make more profits. No. Will you ever get any share of the more profits? No, because the higher profit they will accrue to the Equity shareholder, you won't get anything. Some companies have now started promising their debenture holders, listen, we will give you 8% interest fixed. And by chance we have more profits, we will give you extra if we perform better. So in case our company has made lots of profits, we will give you extra benefit on the basis of market performance. Sir, but it is possible that they have made losses also. No, then 8% is promised. So minimum 8 and more if market performance is better. Market linked debenture. Debenture itself as an asset is not risky. You agree? Market linked debenture is so basically a gift that you are getting from the company. Not risky plus extra return if possible. Because you are not taking any risk here also, it is going to be considered as always short term. But as I said, intermediate students, even if you don't study this, it is okay. Okay. First tax benefit of long term capital gain, the benefit of indexation. So base year for this is 0102. What is index of 0102? 100. Exam year 2425. Index of 2425 363. Take your cost of acquisition, divide by cost inflation index of year of acquisition. If it is base year, so you have to memorize. Any other year will be given to you, and multiply by transfer year. See, for any exam to for any question to come in your exam, the transfer year has to be 2425. So invariably the amount that you multiply will always be 363. We understood the meaning, logic, calculation, and last minute there are certain assets on which indexation benefit is not going to be available. Bonds and debentures because of no risk, but two exceptions are there. Matlab capital index bonds and sovereign gold bonds we will get. Depreciable we already saw, slump sale we will see later, and D&E though in your CA final syllabus. Stock market also later in the chapter, and non-resident acquiring securities. We are going to give some benefit in question number 3. That is why I want it on the same page. These assets, no indexation. Now, amendment again from 23rd of July, there won't be any indexation on any asset. Any asset. That means these assets also are relevant till 22 July. See, till 22 July there is indexation. But on these assets, even then you will not get. And from 23rd July, the indexation is getting eliminated for all the assets. You understood? So what is indexation? It is getting eliminated. That way you may think that from next year, so we have to study only question 1 and question 3. There may not be any question 2. At least right now you think it that way. But you may have some bad news later. Chalo, for now, let us go to question number 3. Question number 3 is giving you introduction. First time in your life, you will come across to a section 112. If you have earned long-term capital gain, so you will be given one benefit in section 112. This benefit will be only if long-term. Section for that benefit is 112. Sir, I think I have seen 112 before. That is 112. A. When your capital gain is on stock market, so this special section will apply. But can your capital gain be outside stock market, like residential house, land, gold, jewelry? That won't go in 112A, that will go in 112. So long-term capital gains in income tax law will effectively be divided into two parts. Long-term capital gain that you earn on stock market, the section for that is 112A, and long-term capital gain that you earn any other place, the section for that is 112. Stock market we will study later. So we are studying 112 for all assets other than stock market. You understand this? Long-term capital gain. By the way, short-term capital gain currently is not in my agenda because we are discussing question 3. Question 3 is tax benefit of long-term capital gain. So that way, right now we are not discussing anything about short-term. But because I am discussing about stock market, I want to tell you one more thing. Can I earn short-term capital gain in stock market? And I can earn short-term capital gain outside stock market also. Like I sell my house in 3 months. Like I sell my gold in 6 months. You understand? 3 months, 6 months is short-term in all the cases. For stock market, in short term also there is a special section 111A. But for other short term capital gain, there is no special section. Normal income tax is applicable. Why I wanted to tell you this is because you have to understand capital gains we are dividing in four types. Short term stock market, short term other than stock market, long term stock market, long term other than stock market. A special rate of tax is given for three of them. Long term will always be special whether you earn the long term in stock market or outside stock market. And short term will be special only if the short term is earned in stock market. If the short term is earned outside of stock market, it is going to be considered as a normal income like your salary also. So special rate of tax in income tax is for short term stock market, long term stock market, long term others also. Only short term others, there is no special rate. Is that clear? But yes, currently our focus is long term. In long term also, we are right now talking about 112. That means, can I say right now we are discussing this capital gain? Because stock market will go here, no, which I will teach you later in the chapter. We are talking about normal long term capital gain on residential house, on gold, on land. Is that normal long term capital gain? Will that be covered under section 112? What is the benefit that section 112 is giving you? Section 112 says if your capital gain is long term capital gain, we will give you a special rate of tax that is 20%. Are there certain incomes taxable at special rate? Do we know that whenever we will have our NTTI, we are going to split our NTTI into two parts, special income and normal income? Special income, for example, long term capital gain, which one? Non-stock market one. And maybe your normal income. So your normal income is that income which will go in your normal slabs. Special income will be taxable at special rate, and the special rate for long term capital gain is 20%. Now understand, if my salary crosses 10 lakh rupees, house property PGBP crosses 10 lakh rupees. After 10 lakh rupees, what is the rate of tax slab rate that you are aware of? 30%. But if my long term capital gain is 10 crore also, 100 crore also, rate of tax is 20%, because this is benefit of long term capital gain. And this being short term, then that 30 will apply. Stock market, you keep aside. Stock market, you don't think only right now. What are two sections of stock market? 111A, 112A, 111A, 112A. Stock market, we will discuss later. Only focus on the gains that we are earning on non-stock market assets, which are your residential house, your gold, your land. So short-term capital gain will be taxable as per slabs, which can go to as high as 30%, but long-term capital gain will be taxable at 20. And if this was not enough, ladies and gentlemen, any asset that is sold on 23rd July or later, all amendments of capital gain are applicable from 23rd July. 12.5% is going to be the new rate of tax on long-term capital gains. 12.5%. You know why? Because from 23rd July, we are not giving any indexation. Do you understand? Do you understand that therefore, if my gain is till 22 July, what am I doing? Sale consideration minus index cost of acquisition. I am doing calculation of indexation. So am I reducing my gain? So what was the rate of tax? 20%. But from 23rd July, when I say from 23rd July, today is after 23rd July. No? But we don't have to see today's data. We don't have to see which assessment year you are calculating. We have to see the date of sale. From 23rd of July, do you understand? It is going to be sale minus Kawa only. That means, is it going to be a higher gain? Because we are removing indexation, we reduce the tax rate. Simplification of tax proposals is what auntie announced. She said, okay, first you take indexation, then you pay at 20. I remove the whole thing called indexation, make the income tax law simple. If there is no indexation, your normal formula will be sale minus cost, sale minus cost, sale minus cost. On that sale minus cost, apply 12.5%. Correct? That means here also, can I say, it depends on your date of sale of asset. If your date of sale of asset is 22 July or earlier, then I will apply this. 23rd July or later, I will apply this. No. Yes or no? Everyone understood? So, ladies and gentlemen, we are doing question number 3. Lots and lots of discussion. Still not over. Question number 3. What is question number 3? Second benefit of long-term capital gain. Section 112. Long-term capital gain will be taxable at 20%. From 23rd July, it will be taxable at 12.5. You also know the reason behind the amendment. What is the reason behind that amendment? Removal of indexation. Ye clear hai? While the new concept that is applicable from here is very, very easy, at least you people have to study this law also for part of a year. And during this part of the year, there is one more complication, because during this part of the year, the law is also giving you one more option. One more option. That if the asset that you are transferring is a listed security, excluding unit, or your asset is a zero coupon bond. We are talking about which period? The period till 22 July. We are talking about which period? The period before the amendment came into force. During that period, what was the rate of long-term capital? 20%. Because that period also had the concept of. But for these two assets, we are giving you an option. Sale consideration minus cost of acquisition. Means do not take the benefit of indexation. Earlier it was available, but take an option, waive your indexation right, and we will apply rate of 10%. So think about it. These people after the amendment may or may not have a benefit. You know, it depends on how much was the indexation. If the indexation was very heavy, then there was no problem in paying 20% also. But after the amendment, for simplification purposes, what is the rule? Sale minus cost into 12.5. But let's talk about these people. Before the amendment, they had two options. Option 1, 20%, but take indexation. That means 20% is on lower gain. Option 2, 10% on this gain only, no? If by chance earlier this was coming as the beneficial part, so these assessees were opting for 10% rate. But poor guys, now instead of that 10, will have to pay at 12.5. Because after amendment, they are removing indexation. So we are talking about the pre-indexation, a pre-amendment period. Only and only in case of these two assets. What were our two options? Option 1, sale consideration minus index cost of acquisition. Is that a lower capital gain? On that lower capital gain, we will apply 20%. Option 2, sale consideration minus cost of acquisition. Is that a higher capital gain? Why, sir? Because we are not giving you indexation. One thing everyone understands, indexation inflates cost and reduces gain. But without indexation, we will increase gain. On this, we will apply 10%. After amendment, it is this only, just that the rate has changed from 10% to 12.5. So after amendment phase is very, very simple. Whether these assets or any other asset, there is no indexation. That means for everything, there is only one answer. What is that only answer? Sale minus cost into 12.5%. So this part is separate. Whatever I am discussing is the pre-amendment period. In the pre-amendment period, what is long-term capital gain tax rate? 20%. But the law also gave you option to pay tax at 10%. In those cases, you had to waive your benefit of indexation. That optional part, now they are making compulsory and changing that 10 to 12.5. That optional part was only for two assets. This compulsory part is for all assets. So for two assets, we had these two options. Sale minus cost into 10% or sale minus index cost into 20%. You can pay tax as per whichever is better. The 2 points to be noted with respect to this earlier option are: one, you have the option for every transaction separately available. Unlike your old regime and new regime, do we have the right to pay tax as per old regime or tax as per new regime? We do. If I go in old, I fully go in old. If I go in new, I fully go in new. I can't take some incomes in old regime, some incomes in new regime. But this option was available on a transaction by transaction basis. Supposingly A limited securities, I am saying 20% is better, and B limited securities, I see 10% is better. Then I will go for 20% in A limited, 10% in B limited. I had the option of changing 20 or 10 for every transaction. It is not that if I take 20% sale minus index cost into 20% or for one company, then I have to take 20 for all the companies. I had the option available on a transaction by transaction basis. Did you understand this? And if the option is available on a transaction by transaction basis, that means can I say every time I sell an asset? Of course, out of these two, I will have to calculate both options. Both options will give me a tax liability, and I will pay which one? Whichever is lower. But because I have option for every transaction, so I will have to do calculation also for every transaction. You understood? That means under normal circumstances, I will have to calculate both at least till 22 July. From 23rd July, look at how easy it is becoming. You don't have to do anything. Only one calculation. Sale minus cost into 12.5%. But there was one secret which was applicable, which is still applicable until your exams for the old period. Am I calculating 20 and 10 for every transaction? Because option is also available for every transaction. If my asset is a no indexation asset, if my asset falls in this list, which is this list of assets which are ineligible for the benefit of indexation. Listen carefully. First attempt is the best attempt. If you don't understand in the first time, no, you will not understand only what has just happened with you here. This is which list? No indexation. Can some of this be like a listed security? Yes. Does a listed security give me two options, 20 and 10? But I won't calculate both options. I will directly take 10%. No need to calculate 20. You know why? Because normally I was doing both calculations. These two gain amounts were different gains. Less gain 20, more gain 10. But if the case is a case of no indexation, so both cases will be sale minus cost. Both gains will be same. Then 10 is better than 20. Any asset which was falling in the no indexation list, so both gains will be sale minus cost because indexation is not available. And on the same amount, if you apply 20 and 10, obviously 20 is higher than 10%. So we will be paying tax at 10%. See, when the two gain amounts are different, because one case you get indexation, other case you don't get indexation, then you have to calculate both. But when the two gain amounts are same, then I will calculate only one, that is lower, that is 10%. Understood? And of course, in the post amendment period, I am calculating only one. There is no indexation. But the bad news for me is, come on, there is no indexation. I have to do only one calculation, but that only one calculation of sale minus cost should have gone in 10%. Post amendment, they are sending it in 12.5%. Understood? Come back. We are doing question number 3. Section 112. Long-term capital gain outside stock market. Rate of tax for LTCG. Special rate of 20. But from 23rd July, 12.5. So because from 23rd July, there is no indexation, there will be only one calculation. Sale minus cost into 12.5. Sale minus cost into 12.5. So whatever permutations we have only till 22 July. Till 22 July, what was our answer? Sale minus index cost into 20. However, for two assets, we have an option. Which are those two assets? First identify. You don't have this option for land. You don't have the option for building. You don't have the option for jewelry. Do you understand? After amendment, everything is here. But before amendment, you don't have the option of 10% without indexation for all assets. You have that option only for listed securities and zero coupon bond. So for those two assets, you were required to make two calculations. One is sale minus index cost into 20. Second is sale minus cost into 10 and pay whichever is lower. Because option is available for every transaction, so calculation also has to be done for every transaction. But if it's a no indexation asset, then do only 10% calculation. Because both gains will be same. And after the amendment, how smooth it has become, do you realize? What is the answer? 12.5. Only one answer, sale minus cost into 12.5. Just imagine if I am teaching a next year student, I will have to still see the detailing of what amendment she has made. Finally, when she stopped talking, we had to start our class. Your IDT class is scheduled at what time? 5 ke 5:30? 5:30 है ना? So I had to enter class because I did not want to waste time. So I downloaded the finance bill. I see some amendments. I will have to wait and watch. But assuming we don't know if new income tax bill comes, what it will have in store. Next year ka students, question number 1, long term, listed more than 12, everything else more than 24. Question number 2, no indexation. Hey, question number 2 is not there. Question 3, section 112, there is no indexation. So what is capital gain? Sale minus cost. Special rate 12.5. Go ahead. Only this much. Sale minus cost 12.5. Because there is no indexation. I hope you are understanding. Correct? Hai? So, ladies and gentlemen, till 22 July, sale minus index cost into 20. But for two assets, one more option, sale minus cost into 10. Pay whichever is beneficial. Calculate for every transaction. But don't calculate for no indexation assets. From 23rd July, only one answer. What, bro? What, bro? 12.5. Is that clear? Section 112 is not yet over. Section 112 ka current data is clear. Now, if a non-resident acquires a securities in India, have we seen this guy somewhere? Have we seen this guy somewhere? Sir, where? No indexation ka list. That means, can I say non-residents on Indian markets, if they make profits, we were not giving indexation earlier also. Till 22 July also. See, 23rd July onwards, who is ineligible for indexation? Everyone, all assets, all transactions. But till 22 July, you and me are eligible. No? They are not eligible. Why? Because we already have one benefit for them. That is sale consideration minus cost. Sir, why do I say cost? Because they are not eligible for indexation. Their capital gain was taxable at 10%. See, here we had option. Here we had option. And of course, non-resident would have chosen only. But if the security is unlisted, do you understand this option was available only for listed? So, if a non-resident was acquiring listed security, listen to me, if a non-resident was acquiring listed security, he was coming here. But we were not doing option 1 for him. Why we were not doing option 1? Because no indexation. So, we were applying option 2 and taking tax of 10%. But if this security is unlisted, indexation is still not available. Whether the security is listed or unlisted, poor guy, non-resident, no indexation even on unlisted. Now on unlisted, this option was not available. So for unlisted, we gave him a separate rule that unlisted also, we will take tax from you of 10. Effectively, non-resident ka existing law was so easy. What was the law? Sale minus cost into 10. But on what? Only on securities. Only on, see, the other assets, there is no special treatment. On securities, sale minus cost into 10. Listed because of this option and unlisted because of this separate line written here. Sir, now understand the logic. Logic is bigger than everything. If you know the reason, no, you'll understand everything. Non-resident come from foreign markets. They invest their money in Indian markets. They make profit. Now we have to show the world that Indian market tax rate is too less. The gains that you make here, we won't harass you. So we want to show this. This is a visible benefit. We are taking only 10%. If by chance we give you indexation, that will reduce your gain. But then on that reduced gain, we have to take a higher rate like 20. So no one will see the benefit of indexation. People will only see, oh, Indian market, if I make profits, no. Foreigner, non-resident. Indian market, if I make profit, no. Then that government takes money in the form of tax at a rate of 20. We have to show ourselves as good. So let's keep this 10. Because 10 sounds good, looks good, global. Only you and me know that to give this 10, secretly we will take away one benefit, which is a hidden benefit. So government more or less will get the same revenue. But internationally, to show the world, 10 sounds better than 20. So let's do one thing for non-residents on securities, eliminate indexation and make it a constant rate of 10%. Please understand. Therefore, non-resident on securities, whether the securities are listed or unlisted, the constant rule, sale minus cost of acquisition into 10%. This is written in 112 only, no other section. Listed because of the option and unlisted because of special treatment. Correct hai? But bro, this also till 22 July, because with effect from 23rd July 24, we have made two changes in LTCG. What is the first change? Removal of, bro, it was already not there. So that change is not affecting here. Second. So poor guy, non-resident, is suffering a loss because of this. See, his gain and earlier and now remains same. Earlier also no indexation, now also no indexation. But earlier he was paying at 10 and now he will pay at. Understood? Understood or no? Huh. We are not taking the benefit of indexation. Because we wanted to show the world that India is taking, government wants to show the world that India takes lower tax from foreign investors. So for showing 10% sounds good instead of 20, the government is saying we will take only 10. So is the government reducing tax rate? In secret, it will remove the other benefit and increase your gain. So monetary wise, government will almost get the same. We removed indexation with that logic, and as per amendment also there is no indexation, but rate is changing from 10% to 12.5%. And understand how simple the life of next year students is going to be. Question number 3 will actually be question number 2. If LTCG, sale minus cost into 12.5. This also is same, no? This is the same rule that as everything else. One line only, question number 3, sale minus cost into 12.5 for everyone, including non-residents, on listed security, unlisted security, property, everything there is one answer, 12.5. Or can we constantly conclude one thing, therefore, with effect from, or amendment, so with effect from 23rd July 24, all cases in income tax of long-term capital gain, of course, sale consideration minus cost of acquisition into 12.5%. So what is the law till 22 July, bro? Sale minus index cost into 20. Correct? Eh? But listed securities and zero coupon bond were more calculation. Sale minus cost into 10. Out of them, which one we will pay? Whichever is lower. So we calculate for every transaction. Apply the option for every transaction. But for no indexation assets, directly applied. In that old period, non-resident acquiring securities, even if they are unlisted, we will do the same calculation, sale minus cost. But from the new calculation onwards, all the cases we are removing indexation, and all the cases we are doing sale minus cost into 12.5%. Is that clear? So doesn't life appear to be very simple for next year students, and aren't you jealous of them? Just imagine. Acha, by the way, currently whoever gave foundation, you may be knowing them, no? Those who give foundation now in the January attempt, no, does not make any difference because your syllabus, their syllabus is same. Anyone who will give the June foundation now, or this year they have kept in May because June and September are too close to each other. Then the May foundation will give next year ka May inter. Question 1, 1224. Question 2 not there. Question 3 sale minus cost into 12.5. Aren't you jealous, bro? By this time they would have probably completed taxable transfer also. Aren't you jealous of me, sir? From next year you have to teach so little now. Abhi, bro. Now, why I abuse? I have strong reasons. Is indexation finally removed? करेक्ट है, करेक्ट है, करेक्ट है, करेक्ट है. Auntie brought this amendment. When Auntie brought this amendment, what is this amendment? With effect from 23rd July 24, there won't be any indexation for any asset. I am simplifying the law. So our calculation is simply going to be sale consideration minus cost of acquisition into 12.5. Your mind is saying that we are the last people who have been taught indexation. Cost into CII of transfer year divided by CII of acquisition year. We are the last people. After us, nobody is going to learn indexation. Because Auntie has removed indexation forever, for good, for everyone. And made it a simple tax rate of 12.5. Correct, eh? But if you are a resident individual or HUF who is having long-term capital gain on immovable property, will immovable property attract LTCG? Resident individual or HUF who is having long-term capital gain on immovable property. This property was purchased before 23rd July 24. Is this the date when suddenly Auntie is bringing the change? I'll tell you the chronology. Supposingly, I have purchased a property in 2001. It's immovable property. Soon it became long-term. As per the existing income tax law, I am mentally sure that I am going to be eligible for indexation. One day, and as the holding period increases, say 2001 to 2024 is 20 years. 20 years ka indexation will make my cost 3.63 times, if you understand. So that will more and more have reduction of my capital gain in terms of more and more amount. And therefore, I have to pay 20% on that reduced amount. Suddenly, Auntie is saying no indexation. Now, no indexation means what? My capital gain will become sale minus cost. Yes, it is possible that Auntie is giving a very low rate of tax. But is it also possible that even after giving such a low rate of tax of 12.5%, the tax liability is still coming to higher than what it would have come if I had taken indexation? So Auntie is saying, for these cases, if your tax as per your earlier calculation, what was your earlier calculation? Sale consideration minus index cost of acquisition into 20% is lower than tax as per new calculation. That is sale consideration minus cost of acquisition into 12.5%. Or can I say this? Tax as per earlier calculation is less than tax as per new calculation. Is it possible that removal of indexation for simplification and reduction of rate from 20 to 12.5 is in rupee terms increasing my liability? You can pay this. Because industry put pressure on her. Auntie, you're removing indexation altogether. I have invested in property so many years ago. You can't remove. Auntie is like, okay, if that tax was better, pay that. Arey bro, listen. If you retain the option, that means I have to do this. How will I come to know what is lower unless I do both? I have to do this. In future also, supposingly I have purchased a property in 2001, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, any date before this, and I sell the property in 2030, 40, 50, 60, 70, 80, I will have to do both calculations. Well, by chance this tax is lower, I am permitted to pay the lower tax. Every batch will be taught indexation after you also. For this last thing. If, and by the way, I must tell you one more thing. This amendment was not introduced in the budget. In the budget, she said sale minus cost into 12.5. Because industrialists put pressure on her. Can't at least retain that indexation for paying lower tax. So she said, okay. She brought one extra paragraph, simple extra paragraph, that however, if whatever I have brought as an amendment, sale minus cost into 12.5, if the tax payable as per the law which stood before these amendments is lower, then assessee can ignore these amendments and pay tax as per the earlier calculation. And bro, for this reason, indexation which was looking like gone forever hereby takes a backdoor entry in the income tax law, and we are now going to calculate just like tax was as per old as per new. Now we will calculate long-term capital gain tax twice. In every question we will calculate long-term capital gain tax twice. Tax as per this and this. Matlab, listen, if we have a total income calculation, total income and total tax calculation, we have to calculate tax 4 times. Old regime, old LTCG. Old regime, new LTCG. New regime but old LTCG rate. New regime but new LTCG rate. 4 tax calculations. Tada! Because we wanted to simplify the law. Simplify the law. So is indexation removed from income tax law as it appeared earlier? Yes. But is it removed forever, permanently? No. Indexation takes a backdoor entry for tax calculation. You can do sale minus index cost into 20 like you were doing earlier. And you have to do the new one, sale minus cost into 12.5. Like you did here. Remember this? You're doing this. And pay whichever is lower. You have to do that also. But do you observe this was available only for listed security and ZCB? It was not available in all the cases. Do you observe that? Then observe this also. This also. Is indexation taking a backdoor entry? But remember that this option that we are giving you. Remember this. This is only for resident. If you are non-resident, sale minus cost into 12.5. Only individual HUF. If you are company or firm, sale minus cost into 12.5. Only immovable property. If it is gold, shares, bonds, debentures, sale minus cost into 12.5. Only if purchased up to 22 July 24. Today you purchase new. You are aware, no, there is no indexation. You are aware, no, law has removed it. So when you sell, it will be sale minus cost into 12.5. You don't have to do both calculations. You don't have to do for both calculation. That means, do you understand? Therefore, only one calculation, that is sale consideration minus cost of acquisition into 12.5% has to be done if you are non-resident, if you are company, firm, etc. You understand? If it is any other asset like gold, share, etc. If it is purchased from 23rd July onwards, only one calculation, sale minus cost into 12.5. Indexation is taking a backdoor entry only for this purpose, for this stupid purpose. Rather, auntie should have been stubborn and said, remove, matlab removed. Don't put pressure on. So at least next year onwards, indexation ka chapter would have been closed forever. Now, unfortunately, forget about you. You to cannot close indexation ka chapter in any case, because till 22 July, all the old law is applicable to you. But new students also cannot change the indexation or close the indexation ka chapter, because new students also, see, supposingly somebody is giving exam for previous year 25-26, May 26 student. Sale will take place in that year, but purchase could have taken place in 2010, 11, 12. So he has both options. The teacher has to teach both options. Student has to apply both options. And every time I will have to tell the history. 23rd July indexation was removed, but for tax calculation, indexation was reintroduced. Earlier used to be like this: sale minus index cost into 20. Otherwise, it was so simple. Question 1, 1224. Question 2, not applicable. But now I will teach chalo indexation in case of long-term capital gain. And question 3, special rate of tax. Sale minus cost into 12.5. No indexation. But now I will have to teach indexation. My modification will be like this. Question 1, 1224. Question 2, in long-term capital gain, you will get special rate of tax 12.5. I will not speak about indexation. Why I speak about something which is not applicable? Then I will say, however, if you are individual HUF who had earlier purchased immovable property, there was a law earlier which was removed. That law was indexation. What is that indexation? We have to inflate the cost, pay at 20, and as per new law, it is sale minus cost into 12.5 only. But these existing cases are given two options to pay taxes. That option continues to exist, but somewhere I will have to CII, etc. I have to continue. I can't stop it. You understood? And last point over here is indexation taking a back entry, re-entry in the income tax law, but only subject to these conditions. Only resident, only individual HUF, only immovable property, only purchase up to this date. One more. Only for tax calculation, we are giving you two options. Huh? Listen, if you ask me the definition of capital gain, it is sale minus cost. See, please understand, there are two types of calculation, NTTI and tax. Focus. Two calculations, NTTI and tax. When I calculate NTTI, do I have to write my capital gain? Sale minus cost, sale minus cost, sale minus cost, sale minus cost, sale minus cost. NTTI over. Sir, what about satisfying these conditions? And 20% is better. I have that option. In case I fulfill these conditions and indexation and 20% is better, I have the option. Capital gain will be sale minus cost. Sale minus cost. Capital gain over. NTTI over. Now go to tax calculation. Does your NTTI contain that LTCG amount? Sale minus cost wala amount? You have to any which way separate it. Apply 12.5 on that. And below that, write or sale minus index cost into 20. The second tax working. I will choose whichever is lower. But in income, sale minus cost only. I will explain with the help of an example here. You understood that indexation is taking backdoor entry for limited purpose. Let me give you an example. Supposingly my cost of acquisition is 1 lakh. If I do indexation, my cost is becoming 23 lakh. Is that possible? My sale consideration is 50 lakh. I am fulfilling all the conditions. Resident, individual, immovable property purchased before 23rd July. My capital gain is 49 lakh If I add my other income, whatever be the other income, the capital gain included in this will be 49 lakh, 49 lakh, 49 lakh, 49 lakh. Sir, sale minus index cost into 20 if beneficial, am I having the right to pay that? Do I have the permission to pay that? Whichever is beneficial? Yes. Yes, I do. But in income, I will write 49. Income calculation won't change. Now I will go to tax calculation. How will I do my tax calculation? I will separate my LTCG, which will go under section 112. I will separate my other income. Other income will be taxable as per normal rates. LTCG is what amount? 49 lakh. 49 lakh will be taxable at a rate of 12.5%. So what do you get as the tax on LTCG? 6. You can't round off lakhs. Pura bolo. 6.12. 6.125 lakh. Correct? That's the latest law. We will get normal tax here, and this tax plus this tax is my total tax. No. Here, you will do or the old calculation, which will be 50 minus my, what was my index cost? 23, which I have calculated. As a student, you will have to calculate. Indexation factors will be given in the question. That's 27 lakh. 27 lakh ka 20%. 5.4 lakh. And I can pay this tax plus this tax as my total tax. Means, now read this last thing that I have written. Only for tax calculation, you have two options. In income calculation, in NTTI, there is only one option. For everything, it is sale minus cost. For everything, it is sale minus cost. Only for one objective, one purpose, that is tax. That also only resident, only individual HUF, only immovable property, only purchased up to that date. Unnecessary backdoor entry by adding that paragraph. Auntie, delete that paragraph and capital gain will become further ridiculously easy. Not for you people, because for you people, the old law, new law, both applicable. People after you will have more complications. You will be comfortable because you are any which way used to both calculations. People after you approach the income tax law without indexation. But in tax calculation, they will have to bring that. Sad, but what to do? And when this happened, one of my past students, by the way, with this question 3 gets over. But I'll tell you one beautiful thing that happened. One of my past students, when I was a newcomer matlab, started teaching in 2010, but first 2 years, accounts, audit, law, you tell me, what do you want to study? She's like, costing. Come tomorrow morning. Which chapter you want to study? Any specific criteria? She's like, no sir, whatever you want to. I'll do marginal costing. At night I will study for 3 hours, morning I will teach you for 2 hours. For a 2-hour class, I used to study for 3 hours. I used to solve all the sums. Next day morning, I will make you solve all the sums. 2-3 students made me do costing, all costing ka sums practice. One day suddenly student comes, sir, PCC account, amalgamation, absorption, internal reconstruction. No problem, I'll do it. You want any specific chapter? She said, sir, I want first fire insurance claims. Okay. Tomorrow morning, fire insurance claims. If you don't say anything, then my chapter. If you say something, then I will study that chapter. And whatever I got, because the age-old proverb says, beggars are not choosers. Beggars are not choosers. Hindi में भिखारी को भीख जितनी मिली ठीक. As a newcomer, you are desperate to get work, especially when you know you are able, but you need some time for getting that recognition. By the end of 2011, beginning of 2012, I had mentally told myself, now only one subject. Costing FM does not change at all. After a point, you will get bored, irritated. There has to be something different you do. Otherwise, marginal standard, same sums which I had solved as a student first time. No change, because conceptually there cannot be any change. So to have some change so that you are continuously interested, I chose taxation. I had no idea that some years later there will be someone who will want to change everything. And while you change, you don't remove the old stuff, retain the old stuff in everything. Old regime, old capital gain, have a backdoor entry, so you have to teach everything. Believe me, once upon a time, CA final ka batches used to get over in 2 months flat. I distinctly remember dates. 10th September, I start a batch. 10th November, I'll start another batch. Today, bro, there is only start date. Sir, when will it get over? Sir, either God knows or auntie knows. Work has increased, quantum has increased, sections have increased, old ones have not been deleted. If there is one thing that has not increased, is my terminal. But by 2012, I was convinced that I am going to be teaching tax. At that time, one of my students, I used to take satellite lecture, online live, even those days. But it was not two-way live. There was a camera in our classroom and students were watching live, different cities. He was watching me in a city called Jamnagar from Gujarat. He cleared CA, got an exemption. I think 68, 69 marks he got in direct tax CA final. And he became a tax manager of a UK company. Today, it's been more than 10 years. He is settled in London. He did message me, sir, my journey from Jamnagar to London, I dedicate to you because taxation ka marks are one thing and being able to answer the questions of the interviewer to get that dream job was another thing. See, he wanted to be in job. You don't want to be anybody's employee, is your choice. You want to have your own business or setup. But he wanted that dream job. And he got it because he answered the law with confidence. In fact, he rather cross-questioned the interviewer only, which is what I want to develop in all of you. That interviewer should be scared of asking you questions. You know everything. He recently sent me one message after this budget ka, whatever I taught you right now, no? After whatever happened. So, I'll just read out that message for you. Vishal Jamnagar. Vishal Jamnagar. Bracket mein UK, of course. So, one alcohol related also he had sent me, but I know you are more interested in that. I don't have time. Fantastic. So basically, one auntie is talking to her nephew. Auntie, we mother's sister, in Hindi we call her Masi, Mosi. She's talking to her nephew. Name of the nephew is Jay. Jay is, I think, a CA or a CA student. Auntie is asking, beta, I got this WhatsApp message. WhatsApp University, no? Everyone is forwarding 12 lakh basic exemption. People are already, this mentioned you in a story, that mentioned you in a story. I have notifications. Bro, I have to go and study the budget. I have to conduct talks on it. So I don't have time to reply to people today. But this is how people forward messages on WhatsApp. I got a WhatsApp message that they have restored indexation benefit for LTCG. Is that correct? See, first budget ka proposal was removal of indexation forever and sale minus cost into 12.5. But they restored after some time while moving the budget. That amendment came when the bill was becoming act. Initial budget was sale minus cost into 12.5 only. But because of industry pressure, she brought that budget. I told you, no, bill and act are different. So indexation restored. Is that correct, beta Jay? Are bol? Hey Jay, is that correct? Indexation is restored. Yes. Yes, auntie. Honorable Finance Minister has announced in Parliament that they have restored benefit of indexation. Now, in case of LTCG from transfer of land and building purchased before 23rd July 24. Hello? Land and building, do you observe what I am saying? Land and building purchased before 23rd July. The tax calculated at 12.5 without indexation or 20% with indexation, whichever is lower will be my tax liability. That is the restoration that she did. That means you are permitted to pay tax as per the old. Okay, beta. So all assets purchased up to 22 July will be eligible. No, new asset not eligible, I understood. But all assets up to 22 July eligible. She is asking, all assets up to 22 July eligible? No, no, auntie. Only land and building will be eligible for this indexation benefit. Other assets like your jewelry, etc. will not come. Correct, hai? Okay, beta. I understood. I have a partnership with someone called Basanti. And we have purchased a land in that firm. Is indexation benefit available for this land? Land? No. No, auntie. Indexation benefit has been restored only for individual HUF. Property purchased by firm, company, association are no longer eligible for indexation. Correct, ma'am? Okay, beta. Understood. My son is NRI and he is having non-agricultural land in Ramgarh. When he will be selling his land, he is individual and it is land. First two conditions. When he will be selling, he can take no benefit of indexation. No, only for resident. Arey, what do I tell you, auntie? Even in individual HUF, they are giving benefit only to resident. Non-resident will not get indexation. Then auntie, that auntie, his auntie. Tell me one more thing. If I sell my residential house and claim exemption from capital gains, see, later in the chapter we will be taught that when you sell a house, there is capital gain. With that money, you buy another house. So you can subtract that purchase value from your capital gain as a tax benefit. Purpose of sale of your old house was not making profits. Purpose of sale was investment in a better house. So how much we had to invest? Our capital gain amount. Now earlier our gain used to be sale minus index cost. So we have to invest lower amount. Now our gain will be sale minus cost. Is the gain figure higher? That means now the investment has to be made for higher amount. So auntie is asking, if I claim exemption by investing in another house, can I invest the capital gain after indexation? The lower amount? What do I tell you, auntie? Now listen to this. Indexation as a concept for calculation of capital gain is completely gone. Is that clear? It has been brought back only for the limited purpose of calculation of only here indexation will come. In NTTI, there is no indexation. In tax calculation, when you do your 12.5, you give one more option only at the time of tax calculation. For any kind of exemption, for any kind of set off or carry forward of losses, your calculation will be sale minus cost. Sale minus cost. Auntie is so tired. Okay, beta. So you are saying indexation will be available only for land and building, only for individual, only for tax calculation, only if purchased up to 22 July, only for resident. Don't you think, beta, that with so many ifs and buts, the income tax law has rather become complicated? Otherwise, sale minus cost into 12.5 would have been easy. Don't you think it has now become complicated? What to tell you, auntie, you don't understand anything. Finance minister has clearly said I am doing all this to simplify the law. Because it was too long, I did not make a reel on this. He had sent me one more message, which I actually made a reel. The message was story of two people. One was a lady called Kavita, other was a guy called Pandu. So my reel was, let me tell you the story of Kavita and Pandu. Both of them decided to contribute to the economy. Kavita made a contribution to Prime Minister National Relief Fund. And Pandu contributed by buying 2 bottles of alcohol. Both of them spent 5,000 rupees. Kavita, when she contributed 5,000 to the government, she took tax benefit of 1,500. So her net contribution becomes only 3,500 because 30% tax savings. But Pandu purchased only 2 bottles of alcohol. In that, state taxes, etc. If you add the excise, 72% component will become the tax part. So it is 3,600. Already more than Kavita. Plus, Pandu also invested in some peanuts, some snacks, etc. That is additional 1,000 rupees contribution to the government in the form of consumption taxes, GST. Plus, Pandu has created employment in the distillery industry, in the bottle industry, in the snacks industry. He has generated in employment, contributed to employment generation. And Kavita does not even know where her money went because she just gave in the Prime Minister fund. So next time you know how to contribute to nation building. Wait, and coincidentally it's a Saturday. So ladies and gentlemen, finally we realize that yes, indexation will take a backdoor entry for the purpose of tax calculation. Everyone is clear? This finally finishes your question number 3. Question 3 was second tax benefit. So ladies and gentlemen, question 1, long term, short term. Old law 36/12/24, new law 12/24. New means from 23rd July. Question 2, indexation. Multiply by 363, divide by acquisition year, base year 100. 7 cases, no indexation till 22 July, and from 23rd July, no indexation on anything. Question 3, till 22 July, sale minus index cost into 20. 2 cases, you can do sale minus cost into 10 also. Listed securities, that's it. But from 23rd July, everyone will be into sale minus cost into 12.5. Indexation is removed, but subject to certain conditions. It is now taking a backdoor entry. But remember that backdoor entry will be only when you are calculating tax. If any question tells you calculate capital gain, if any question tells you calculate income, NTTI, it will be sale minus cost, the simple calculation. Only at the time of tax calculation of individual HUF for immovable property purchased up to 22 July, provided assessee is resident. When you calculate tax of 12.5, give that second option. Only and only at the time of tax calculation. Clear hai? With this, we finally finish our capital asset along with its types. Is that clear? Now, ladies and gentlemen, second concept of the chapter, taxable transfer, defined in section 247. One more time, in the law, they have given us inclusions and exclusions. They have given us what, bro? Inclusions and exclusions. Which part we will solve question if the question comes in exam? Inclusions. Inclusions pe we will solve question. Exclusion comes, so we will simply say not a taxable transfer, therefore no capital gain. If you use the word exempt, I will throw you out of the window. Exclusions we won't calculate only. We'll calculate only in the inclusions. So yes, we are interested in inclusions. Same thing was in capital asset. But when we studied capital asset, we realized that the inclusions have been defined in such a bad manner that we have no choice but to go and learn the anything that is not excluded will be considered as inclusion. Correct? Eh? The good news is that here the inclusions are properly defined. Following transactions are going to be considered as taxable transfer. If question comes on this, we will solve. Sale minus cost. Will we also have index cost? At least for the purpose of calculation of tax, we will be doing calculation of gain, etc. only in these cases. If any question comes on any of these transactions, I don't have to solve that question. Think about it as an exam perspective, exam ka student, that if they want to make you solve something and ask you question and give you marks for the answer, then they can't ask you question on this. Then question has to come on this. Our focus is this. In capital asset also my focus was this. But this was so bad that I had to go to this. Here it is very well defined. My focus will be on inclusions. So to be very honest, exclusions you just have to read once from the textbook. Wherever in your textbook your capital gain ka chapter starts, in that second or third page of that chapter will be a list exclusions from the definition of transfer. Second or third page of capital gain, not the 20th page of capital gain. Transactions which are excluded from the definition of transfer. What is that page number? Certain transactions are not transfer. कोई क्वेश्चन आंसर में पागल लोग हे भगवान, can't believe this. No problem. Still not got it. 130. These are exemptions from capital gains, bro. Not this. Yeah. Exempted transfer. Okay. Page number 134. Okay. Understand. Please understand. Ladies and gentlemen, everyone be with me. While we have to focus only on this, for exam, this is not relevant. At least once you have to read. But knowing your habit, you are not going to read. I have to at least make you understand why it is not relevant. Why a transaction can be kept in exclusions from the definition of transfer. What can be the logic? Why should a transaction be called exclusion? I am going to not do the entire list, as I said, you are going to be reading, but some of the transactions from that list I will pick up and discuss with you, and we will understand why a transaction can be excluded, why a transaction will be excluded. Let's understand some of the examples here. Supposingly a transaction called gift. You gift your capital asset to me. Is that a transfer? But it cannot be a taxable transfer. Why? Because the transferor is not getting anything in return. If we make such a transaction a taxable transfer, the sale consideration will be zero. It will create a loss. We don't have to give you benefit of that loss. So exclude it from the definition of transfer. You understood the logic now? Chalo, we'll do more so that you are absolutely clear in your brain. Absolutely clear. Any transfer due to death, due to somebody, writing your name in the will, you writing somebody's name in your will, any transfer due to death, will, inheritance, one person dies. So when that person dies, whatever wealth that person has, obviously we are going to burn all that wealth along with that, or bury, of course. Don't be disappointed. Don't get angry. Burn or bury, whatever be the custom being followed. Wealth also we have to burn, no, along with the person. No. You don't bury the wealth along with the person. You don't bury the cash, the jewelry, etc. No. No. Kya? Where there is a will, there are relatives. Wherever there will be a will, there will always be relatives. Correct? Hai? There is this famous, saying in Urdu कि क्यों दौड़ते हो पैसों के लिए, कफन में जेब नहीं होती. Correct? Hai? But bro, when I am alive, I need money. When I die, I don't need money. Thank you for letting me know that there is no pocket in the dead body. But when I am alive, I am not dead. No, see, when I am alive, I am not dead. I need money. Lol. But when this person dies and we don't burn the property, so the property will go to the legal heir. Is that a transfer from the deceased to the legal heir? It can't be taxable transfer. Why? Same. You're not getting any consideration. But here to supposingly we make it taxable transfer and we tell the deceased to pay tax. So deceased will say, yes, sir, I will pay tax. And if I don't pay, you come and recover it from me, sir. Wherever I am going, come and recover, sir. I will pay. You come, no? Come with a return ticket, sir. No return. Eh? Thank you. RIP is rest. It is not written if possible, because that is not possible. It is not possible, no, bro. You understand or no? So because the deceased is not getting any consideration, same logic as the first exclusion. In fact, all the cases that are excluded have the same logic. Same common logic between all the cases that have been excluded from the definition of transfer. I'll do more with you to make the concept absolutely clear, that you should not be having any ifs and buts. Sir, why are these transactions not taxable transfer? Because what is common in all of them, transferor is not getting anything in return. Supposingly HUF undergoes partition. So HUF at the time of partition will do what to its assets? members, co-partners. Are the assets being transferred? Not a TT. Why? HUF is not getting any consideration in return. Now do you understand? What is the common reason behind excluding all the transactions from the definition of taxable transfer? The transferor is not getting anything in return. Even if we make it taxable transfer, it will result in a loss. Correct hai? Next. My video is proper. Point 4 null. HUF is not getting anything in return, but yes, we do the last point to make it permanently clear in our mind. There is one logic behind excluding everything from taxable transfer. There is a company which is under liquidation. Company is under kya bro? Liquidation. And this company which is under liquidation obviously will transfer its assets to shareholders. This is not a taxable transfer. Liquidation unfortunately has been removed from account syllabus altogether. Okay, inter mein tha. In foundation it was there. Liquidation of companies. Okay, it was there in any law, any chapter. Liquidation of companies. It was not there anywhere. Oh, sorry, sir, it was there. We don't remember. It can't be that liquidation either in accounts or in law. Somewhere it has to be there in your syllabus. At foundation or inter. Because so many changes have taken place in the new syllabus. I am trying to cope with changes in income tax law. You can't be expecting me to know the changes in syllabus of all the subjects. I will know maximum changes of your tax syllabus. Whenever a company goes under liquidation, it has to one by one sell its assets and pay its liabilities. There is an order of payment. Legal expense, liquidator remuneration, liquidation expenses, secured creditors, preferential creditors, unsecured loans, preference shareholders, and last. How you are answering all this if you have not studied liquidation? Piecemeal is in partnership. Company ka liquidation is also a separate process. Fair enough. You understand now, everyone is paid, only shareholders are left. So instead of selling assets in the market and giving them money, we hand over our assets only. Any which way we have to close our company, we hand over the assets and we shut down our company. This transaction is not a TT. Logic. Company is not getting anything in return. Do you understand? Do you understand the logic here? Fantastic. So what is the common logic behind all the transactions that have been excluded from the definition of taxable transfer? No consideration. In any case, we don't have to learn this list. If a question comes on this, we just have to say, I will not solve. Sir, why will I not solve? Because it is not a taxable transfer. I will solve on these cases. First, a transaction called sale. At the beginning of the chapter itself, I had warned you all, do not use the term sale of capital asset. The correct terminology is taxable transfer. And now do you realize that in the definition of taxable transfer, sale is just a point. Sale is a subset of the definition of transfer. Sale is not the only way in which an asset can be transferred. There are further ways. There are points 2, 3, 4, 5. Yes, sale is the most popular of all. Sale is the most obvious of all. It is so obvious that people understand sale and transfer are one and the same. But we realize sale is just one of the ways. What do you mean by to sell something? Here it is capital asset, but in general, what do you mean by sale? Take something in return. No, sale does not mean that. Sale means the transfer has taken place for money. And which is why it is taxable transfer? No, because if I don't get any consideration, it is not a taxable. It's a loss. No set off of that loss. So any transfer which is for money, I sell my asset and I take money. I sell my asset and I take money. that is going to be considered as sale. And am I getting consideration? Is that a taxable transfer? Yes. But sometimes the consideration can be in kind. Sometimes the consideration can be non-monetary. Sometimes we can have a transaction called barter or exchange. Is that possible? Barter or exchange. Give one asset and in return take another asset. Is that possible? Hello? If I give my capital asset and I take money, am I getting consideration? Yes. It is sale, taxable transfer. If I give my capital asset to you, in return, you give me 1 lakh bottles. Am I still taking consideration? Yes. That is also transfer. Transfer for non-monetary consideration. At the end of the day, as long as the transferor is getting something in return, it is going to be considered as taxable transfer. You understood? So what you meant was transfer for something in return. But I am segregating them into sale and barter, monetary and non-monetary. End of the day, both of them will be considered as taxable transfer. Sale, the most obvious of all. But instead of money, if you are getting consideration in kind, is that also taxable transfer? As long as you are getting consideration, because not a TT, because you are not getting consideration. Not a taxable transfer because you are not getting consideration. Correct? Third, relinquishment or extinguishment of your capital asset. Relinquishment or extinguishment of your capital asset. Everyone? Yes, no. Show me your index finger. Index, huh? Index finger. Keep that on your throat here and say the word relinquishment. Extinguishment. You feel the stretch? This part is called epiglottis. अरे वो था ना my name is Khan, Khan, my name is Khan. शाहरुख खान मूवी नहीं देखा? Put a stretch on this part. Bro, it is so stressful. Relinquish, extinguish, and the word is only so complicated. How will I solve this question without knowing the meaning? Sir, forget the pronunciation. Please tell me what do you mean by relinquishment or extinguishment? If I have a capital asset and I voluntarily sell it to you and in return I take money from you, what have I done? If I have a capital asset and I give it to you, in return you give me non-monetary consideration, it is barter. But sometimes you don't do these things with your asset voluntarily. It just happens. Your asset goes. There. Sir, where was gone? This is, a classic case of you playing with kids at home. You have kids at home, anyone? No kid at home? Who? Of course, it won't be yours, I know that. At home, someone's... Who is there? Guest stay at home permanently. Now you have... Right now you have kids at home. No, anyone having permanently some kids at home? It won't be yours, no? It will be your elder sibling, your niece, elder sister's baby. Kaun hai? No one? She's like, sir, I am the one. You're talking about kids at home? Oh, sir, so you're talking about me only. Yeah. Like those really small kids. My son is, for example, he'll turn 6 now in April. So we play with those kids. Supposedly this is a capital asset. Of course, with children, we don't play with capital asset like gold. Children ke sath we play with toys or, those soft toys or balls or anything like that. Have you ever done with a child like this? Take, take, take. And when the child comes, Gaya! Baba le gaya. Kids these days are so smart. They will first come and check behind you. They know you are hiding it behind you. ये था behind. But have you done this with kids? You done that? Baba le gaya, gone. That is what happened with your asset. Your asset gone. Where? Baba le gaya. The asset is gone. Correct? Your asset is gone. Gone. You've not voluntarily sold it. You've not voluntarily exchanged it. What happened to your asset? Gone. Sir, where? Let's understand with the help of two examples. Example 1. An asset which is destroyed. An asset can be destroyed due to any natural or man-made factor. Earthquake, tsunami, flood, riots, enemy action, war can destroy your asset. You haven't voluntarily sold it to a third party or exchanged. But what happened to your asset? Baba, gone. I did it with my pen ka box only. Last batch at a place called Mulund. I took one girl, she was sitting on the first bench. I took her highlighter. That also she was carrying one expensive Camlin wala highlighter. I did this and I dropped it. And behind that teacher ka place, no, there is this gap. So like, she's like, sir, I want my highlighter. After the class, we had to literally call the office staff, myself, 2-3 boys from the class. All of us had to pull that wooden partition out. Not just her marker, but many more things were discovered from behind that partition. So I did not take a chance. I did it with my pen ka box only. That is what happened with your asset. Baba, this is taxable transfer. But I have a doubt. And you will have to give me the answer. Sir, if I sell, I get consideration. If I barter, I still get consideration. These cases, I don't get anything. Therefore, it is not a TT. If my asset is destroyed in earthquake or floods, I am not getting anything in return. How can it be TT? Bro, I am going to get something in return. Use your common sense. Is it possible that I get insurance claim? Yes. This insurance claim will act as selling price of my asset. Think about it. See, normally if I sell, I get money. But here I am not selling. Asset is getting destroyed and I am getting insurance compensation. That insurance compensation is working as selling price of my asset. You understand? You understand? So a destroyed asset is also a TT. And what will be your sale consideration in a case like that? Insurance compensation. But one last line of this example. I'll do one more example. This last line of this example. And at the end of this line, believe me, our government has been like really very bad here with taxpayers. And today, without any, you say, bro, please hesitate, sir, you should not be using words like these. I have never used any word in class. We call them customers. But today I am going to use one word in class, which is inappropriate for a classroom, but no better word to explain what government has done here. And I apologize to the minors in advance. I apologize to the female department of the classroom in advance. My mother always tells me, be mindful of your tongue in front of women. Bro, there is no equality here. Now there is no problem to feminists. They speak anything, anywhere, in front of anyone, without even checking if there is someone listening, without any hesitation. But we boys have to be boys, huh? We have to be careful. But as my mother says, so I am very careful. I never use that word. We have developed that code word, customer. C for customer. But today I am going to use not that word, of course. So someone like sir, we want to see how it sounds from your mouth. One day I will keep one stand-up comedy show. There you can come, and there it will be uncensored. That is not a classroom. There you can, but you have to buy tickets, sir. As a complimentary ticket, and not covered in admission. That day you come. If you want to experience how I sound if I speak those words. But today, a slightly diluted word, because no other word is appropriate. Our government has been number one harami. Still inappropriate for a classroom. I know. Hitesh is disappointed to the extent that, sir, I was expecting something big, sir. Something better, sir. Sir, bro, this is just like we speak on normal basis, sir, in front of anyone and everyone, sir. You don't speak, but I spoke. Harami. In English, it is called rascal. See how sophisticated it sounds. No? Rascal. It's a wow, cool. Harami. Sir, classroom. Sounds cheap. But that's what English is. No, it dilutes your bad words. Stop listening with so much interest. हाँ sir, अच्छा चल रहा है. Continue, continue. No. I don't want to repeat that word again and again, but our government has been that. I will tell you the law, and you will tell me the reason behind me using such a strong word. Here the law is this transaction a taxable transfer? Yes. Only and only if the claim is received. If the claim is not received, it is not a TT. If the claim is received, it is TT. If the claim is not received, it is not a TT. So, TT. Your mind says, of course, sir, claim is received, then I have something in return. So, TT. Claim is not received. So, I don't have anything in return. So, not a TT. Sir, that's right only, no. Then why are you using such a strong word? You have to give me reason for me addressing the government with such a strong word. Yes. Benefit of what? How can you explain? Explain karna. Once upon a time you were giving correct answer, but I told you to explain, so you quit. And your right answer also you did not give. Explain karna. Whatever you spoke, there has to be some reason, no? Explain, no. Where is the problem? If you don't give the correct answer, I am not going to make fun of you or humiliate you or insult you. And by chance, if I do, see, I never do that. In case I do also. How does it matter, bro? Outside the classroom, you and me forget it. Ultimately, we are here to learn something. No. Let it be wrong, but speak. Don't hesitate. Bull. No benefit of loss. How can you explain? Loss kaise? How will the loss take place? Asset is destroyed. Okay. No claim received. That means it's a loss. Correct? Not a TT. Because if we make that TT, so he will make the loss. Selling price is 0 because claim not received. And the purchase price will become loss that you will set off. So don't make it TT. Because no compensation means no capital gain. But in case you get compensation, that can also be less than cost, more than cost. We don't know. But it can be gain or loss both. That we will see. If you don't get only, it is definitely and guaranteedly a loss. So not a TT. So if there is chance of profit, we will take tax. But if there is certainly going to be a loss because of no compensation, we don't want to give set off. So we remove it from the definition of TT so that you are not allowed to create only the loss. Are you understood? Why I use such a strong word? Sir, be fair, no. Whether gain or loss, keep the same rule, no. Correct, hai? Fantastic. Second example of relinquishment, extinguishment. There is a company in liquidation. It is transferring assets to shareholders. That's a taxable transfer. Sir, everything is fine, no? Sir, you lost your brain, it seems. Sir, only the color is different. Otherwise, whatever. Sir, check. Company in liquidation. Asset transferred. सर एवरीथिंग इज सेम. अच्छा ग्रीन कलर टीटी, ब्लैक कलर नॉट अ टीटी, ऐसा है? नो सर हैज गॉन मैड. नो, सेम थिंग ही इज राइटिंग इन टीटी, सेम थिंग ही इज राइटिंग इन not a TT. It seems, sir, Saturday evening you are supposed to do it. Morning only you have done, just because you are so sad with new income tax bill coming now. Some student message me, sir, all the best for next week. Inter cleared student having final attempt in November 26 is messaging me, all the best for next week. Why? New income tax. I replied, bro, it does not make any difference to me. All the best to you because it is applicable for your exam only. Sir has written the same thing in TT and not a TT. Sir, we think that today you should leave us. We'll manage, sir. Even if there is a gap between your lecture and IDT, we'll manage. We'll have some food. We are experts in having food. We'll explore some. We'll eat something now. Then after half an hour break, we'll explore something. So many street food vendors serving excellent food, but we are unable to try everything because most of our time goes in the class. Our target is every half an hour we should try something new. So we'll get 3-4 hours ka gap. So we will be able to try at least 5-6 things. So sir, you should leave us now. Seems that you are unwell, sir. You are writing the same thing under TT and not a TT. Company in liquidation transferring asset to shareholder. See, sir is absolutely fine. If auntie, after 5 years I have tolerated, now a lot of things cannot affect me. So any big guy or big name threatening me that you come under my brand, otherwise see how I destroy you in the CA coaching profession. See how you will not be able to teach anyone. Bro, I started with zero. What are you going to do to me? You can't do anything to me. Market mein milte. Let's meet in the market. Let me see how you affect me. How will you affect me? You'll pay double, triple to my competitors and take him. Take him. You'll give free coaching to my students. Chalo take. And today's generation of kids, free coaching milega, so they'll go away also. But there will be definitely some who are still interested in learning, no? From me, at least someone who likes me more than the classroom projector. I will cater only to them. Simple. You can't easily threaten or affect me. Correct? So I don't get easily affected with what people think about me or talk about me. I know I'm extremely young, handsome, talented. If you tell me why I have written the same thing at both places, it is a Saturday evening, and whatever time your IDT lecture gets over, 5:30 to 9 o'clock. So believe me, Saturday party scenes start after 9 only. And by the way, just to let you know the geography of our class location in Mumbai, this road is called Senapati Bapat Marg. If we go in one direction towards the South Mumbai from where we are, we come across in a span of 5 minutes, we will come across a place called Lower Palladium. We just enter that Palladium, that's a mall. And there are, and in fact, not just that, right side we have Palladium Mall, left side we have Mathura Das Mill, we have Todi Mill, we have Raghuvanshi Mill, and they are loaded with these party places. Just to let you know, I am more Gen Z than the Gen Z. You don't even know the names. I have visited all of them. I come back here at 9 o'clock and take you with me over there. And this time it will be sponsored. Huh? I will sponsor. That does not mean that you go beyond your capacity, vomit, but it is free. So chalo or. Then still vomit, but it is free. Chalo or. And some of those places, Zomato Gold also works. So we get 30-40% off. That way I'm very smart as a chartered accountant also. Bro, you have a lot to learn from me other than tax also. I get paid for tax. That is also too less. No point screaming today. No one there to hear. So why have I written same thing at both places? Yes, please. You understood the question. And of course, sir, you don't ask, sir, how will we come? That's your problem. I can't do anything. You should have taken offline batch. हाँ बोल.
सर ये यहाँ पे कंपनी शेयर होल्डर को देगी एसेट, अब यहाँ पे कंपनी खुद बेचेगी पहले.
Sorry, wrong answer. Better luck next time.
In case of maybe amalgamation, shareholder could.
Wrong answer. Better luck next time. Overexcited soul. पहले का pending, but as per law of limitation, it will be waived at cancelled at any point of time. हाँ. I don't like to keep liabilities on myself for very long, by the way. हाँ. Anything else, anyone? हाँ बोलो.
Sir, it will be taxable for shareholders.
क्या? How?
सर क्योंकि जो भी एसेट जाएगा शेयरहोल्डर्स,
Which asset?
कंपनी लिक्विडेशन के बाद,
हाँ, ओके.
तो अगर शेयर होल्डर ने उसको प्रॉफिट पे बेचा तो फिर उसको टैक्सेबल.
Wrong answer. Wrong answer. But I observe one thing. The participation levels with offer and without offer. Oh, bro. And based on the quality of the offer. Again, the levels are different. A simple thing like, I will appreciate you, yeah, cup of tea or coffee, so no one answers. The moment you think about Saturday, sir, free mein. The moment we talk about a date or anything, shameless people, chalo, theek hai, date is still fine. We can have the dignity of a student-teacher respectful relation also. And we are talking about that only. So, chalo, that is, I don't see any harm in that as well. But participate in the non-offer cases also, no, please. Still wrong answer. Anyone else? Okay, last 30 seconds. क्या? You raised your hand, no? No? Done? Pakka done? Is this not a TT? For the company? As no consideration for the company? Same transaction, observe the shareholder. What was he having before liquidation took place? Shares. Now his shares are going to go down the gutter. You could have thought about this word, no? His shares are going to go down the gutter. His right in the company will relinquish. His right in the company will extinguish. His shares are a worthless piece of paper. Why? Liquidation. Shares gone. Gone. But don't worry, shareholder. Shares are not going away free of cost. In return, you are going to get. And the asset that you are getting is going to serve as your sale consideration of share. This is company ka capital asset. For example, land. Company gives land to the shareholder, not getting anything in return. Not shareholder is getting that land against shares. It is like the shares are sold. Now, if I voluntarily sell the shares in the market, it comes here. If I exchange the shares for something else voluntarily, it will come here. I have not done this transaction voluntarily. Liquidation was a company decision. So my shares will extinguish, but I will get consideration. What is my consideration? Land, example, or any asset which the company is willing to give at the time of liquidation. That is considered as sale of shares for getting asset. TT for the shareholder. Bro, I thought you almost made it. Because he did say, sir, capital gain for shareholder. So I purposely tried to confuse him. How? How shareholder? He said when this asset is sold further. No, sir. That means you're talking about some other transaction. In this transaction itself, it's TT for the shareholder. Sir, why? Because he is getting the asset against Later he will sell the assets, no? Like land received. There will be one more capital gain. But that's a second transaction. In this same transaction, for company, not a TT. For shareholder, yes, TT. Yes, TT. I almost ended up spending, and I don't know his capacity also. So he's staying in a boys' hostel. And it is generally observed that boys' hostel people are having lots and lots of capacity. है ना? Why bring casteism here? So where are you? Where do you belong to? Maharashtra. We all belong to Maharashtra. And once we are in Maharashtra, we have immense capacity. Bro, Gujarat meat is banned. What are you saying? I'm not talking about food eating capacity. That is in the Gujaratis more than anybody else. All types of food. Let's talk about Marwadis. We are Marwadis, no? Food, theek hai. But every time we eat any food, there is a concept called ghee. We don't put ghee. We put the ghee upside down. We don't drink water. We drink ghee. Bro, we are not B positive. We are G positive. Bro, of late I do go to the gym. But once upon a time, we used to go only for gym. Not gym. Only gym. This is a Marwadi word for eating food. Marwadis call eating food, they say gym. A public buffet, they call it jiman. Ha, same. You almost gave the correct answer when you said capital gain for shareholder. But of course, if you would have said the full thing, certain offers I have to honor. Okay, but don't worry, bro. Don't be upset. He's in trauma right now. You'll get more options. Don't worry. Don't worry. Don't worry. You'll get more options, more opportunities. The law only expects you to use your common sense. Common sense is the biggest law. There is no law bigger than common sense. Human intelligence is superior to any kind of artificial intelligence. That's a subsequent transaction. That we will see, no, when we go to computation. Right now, we are not learning computation of capital gain. You're not understanding. When we go to computation of capital gain, here what we will take as sale and cost. Then later, if he sells the asset, again what we will take as sale and cost. That is computation. We'll do it. Right now, we are doing TT. Sir. Do you understand? Asset gone. You have not voluntarily sold your shares or exchange, but what happened to your shares? Baba, gone. Gone. Understood? Extinguished. Yes, please. Which transaction, bro? Yeah. This transaction. Company का shares are going. Company and shareholder are two different people. Two different people. Their tax calculation will be separate. Now you tell me, I explain about company or shareholder? Shareholder. What does he have before liquidation? Shares. Are the shares going away? Yes. And he's getting something in return? Yes. Because he's getting something in return, it is TT. Shareholder clear? Now let's talk about company. What is the company having? Shares. No, company has issued shares. It is having what? Asset. What is happening to that asset? Going. For that, what is the company getting? Bol, for that, what is the company getting? And therefore, for the company, not a TT. For the shareholder, TT. For the company, not a TT. Got it? Consideration के लिए liability reduce होना भी ये हो सकता है. For ये company के लिए कैसा like share with liability. So वो reduce हो रहा है तो वो consideration हो सकता है. Shares actually is not a liability. Share capital reserves and surplus are shown as liability to show the net worth, the stake of the investor. Actually, they are not liabilities. Liabilities are below that. Creditors. Creditors, loans, etc. So first of all, if they are unpaid, there are unpaid liabilities. No, they can't give asset to shareholder. Then you don't know order of payments of liquidation. First job is to pay off your liabilities. The number of shareholder will come only last. Unless and until you paid off your debts, your liabilities, your creditors, your loans, you can't give anything to the shareholder. Equity shareholder will get money last. That day when he is getting this asset, one thing be clear, there is no liability. Otherwise, he won't get. Then what do you know about the concept of equity shareholder being equity being a risky thing? Understood or no? Everyone clear? Now, point 4 of which list? Hello, we are doing taxable transfer calculation. Compulsory acquisition is a concept in the definition of taxable transfer. It will take some time for us to understand not just the transaction but the calculation. We'll learn everything. See, sale is something I don't have to explain. Barter is something I don't have to explain. But I still wrote something about it. Transfer for money, transfer for non-monetary consideration. Relinquishment, extinguishment was something I had to explain. I give you examples. This I have to explain full transaction. What is it? What does it mean? Etc. Etc. Everything. But then there is one more last case, that is conversion of capital asset into stock in trade. Conversion of capital asset into stock in trade are the last 2 points in the definition of taxable transfer. Everyone is with me? Which means that my task now is, I will do this. The whole explanation of this concept called compulsory acquisition. It will take some time. It will take some time. It will take more than some time, but it will take time. Once we do this, then we go and do whatever time it takes to do compulsory acquisition. Finally, we go and do conversion of capital asset into stock in trade. Bro, after this time, which may be 45 minutes, almost more than that, when I say 5, you should tell me 5 of taxable transfer. Then I do this. TT over. And one thing left. Computation. Agenda is clear. So our task is to go and learn the 2 concepts. First concept, compulsory acquisition. And second concept, conversion of capital asset into stock in trade. Clear hai? These 2 concepts will complete our taxable transfer. We'll take a break of 10 minutes and continue this. Let's do this only. Ladies and gentlemen, let's go ahead and we go to point number 4, that is compulsory acquisition. Compulsory acquisition. First question is, sir, what this concept means? Once we know what the concept means, the other things are subsequent, secondary. Let us understand with the help of an example. And the more you participate, the better it is for you. So, you, Mr. X. What great thing he did in his life? Purchased a residential house. In which year he did this? 0102 at a price of rupees 1 lakh. So you, what great thing you did in your life? In the year 12 at a price of rupees 1 lakh. And he was having a peaceful life, By the way, purchase will not attract any capital gain. Capital gain or any income will arise only when you sell, transfer. Peacefully he was living his life. When one day suddenly, in the year 2005 or 2006, he gets a communication from the local government. Bro, teri to lag gayi. You are gone, bro. You have some bad news for you. We have some bad news. We are going to take away your property under a concept called compulsory acquisition. Sir, whenever you are holder of immovable property, that is land or building, and at that particular location, government wants to make bus stop, railway station, monorail, metro, bullet train, highway expansion, widening of roads. So government will send you a notice and saying, bro, please vacate. please vacate this property at this location. We are going to make metro, bullet train, bus stop, railway station, whatever is their plan. Sir, but it is my property. Who told you? All land belongs to the government. You have constructed your property on that land. Therefore, every year you pay property taxes. Now, government had decided that this land will be used for bus stop, railway station, metro, bullet train, highway expansion. So we take back our land. If your land is only land, so they will take away a portion. We call it road cutting. So portion of your land they will take away in the highway, and the size of your land will get reduced. If on that land a building is standing, you can't take your building somewhere. Who are you, Hanumanji? What was the name of that mountain that he lifted? कान के नीचे tight slap. Sanjeevani was the name of the medicine. Don't speak nonsense. Who was that Sanjeevani? The medicine was Sanjeevani. Mountain was not Sanjeevani. Mountain, and don't say Sir Kailash Parbat. No. That is where Shivji is. What was the name of the mountain? I think so, yes. I am not sure. Even I am not sure, but I don't speak when I am not sure. But the medicine was called Sanjeevani. To save whose life? That is mentioned in Hanuman Chalisa if you are not aware. Lai Sajivan Lakhana Jiyaye. Wait. And which is why Sri Ram told him that you are as close to me as my brother Bharat. Tum mam priya Bharat hi sambhai. Hanuman Chalisa.
Yes.
Who are you, Hanumanji? You can lift your building and take it somewhere else? No. You have to hand over your building to the government, and they are going to construct their development ka project over there. Sir, but how can they take? It is my land. Listen. In India, earlier there used to be a law called Right to Fair Compensation and Transparency in Land Acquisition, Rehabilitation and Resettlement Act. Name of the law. The Right to Fair Compensation and Transparency in Land Acquisition, Rehabilitation, Resettlement Act. Don't forget the law. One day you will take to learn the name. By the way, this law is abolished. No, this law is not abolished. My bad, sorry. Earlier there used to be a law called Land Acquisition Act. Very simple law. This law is abolished, and in that place they brought this law. So whatever was written in the old law, they have written in the new law. Typical habit of our government is old wine in new bottle. So whether it is the Bharatiya Nyaya Sanhita or Nagrik Suraksha Sanhita, or as I can foresee, we will make income tax simple. By the way, one announcement I must say in the budget speech, that the new income tax law, in terms of number of chapters, basically number of sections and words, will be 50% in size compared to the existing income tax law. If by chance that is true, that we come to know only when it is presented in the next week. If by chance that is true, we'll have to see how true it is. And by chance the time taken for me to complete a batch is reduced at the same remuneration, because when there is more work, there is no increase in remuneration. So when the work will reduce, certainly there will be no reduction in the remuneration. I will certainly say thank you, auntie, or apologize maybe. But only and only when I see that change, not before that. Correct? So, ladies and gentlemen, abolishing laws, bringing new laws, age-old tradition in our country. We had Income Tax Act 1922, which became 1961. Soon we will have Income Tax Law, maybe 2025. We had Companies Act 1956 becoming Companies Act 2030. The gist of the law, whether land acquisition or the right to fair compensation law, is that, listen, citizens, oh, people of the country, listen. Whenever we want, we can take your immovable property. We are creating a law for it. We will send you a notice and tell you to vacate them. Go, get lost, because land belongs to us. And that concept will be called compulsory acquisition of your property. But don't worry, because when we take away your property, we can't tell you that we are taking away your land, building, house, your property, and you have to go somewhere and sleep on the footpath. Because don't forget, this is Mumbai and we have Solomon Boy, Salman Khan. We have Salman Khan. So we can't expect you to sleep on footpath. If we take away your land, in return, we will give you something called compensation. The compensation that was promised at the time of compulsory acquisition was 15 lakh. Hmm, hmm, hmm. Government promise 15 lakh. Government promise 15 lakh. Some emotions get triggered within you. Government promised 15 lakh. No, it depends on your political inclination. Government has promised against your property, we will take away your property, but we will give you a compensation of 15 lakh. But promising is not enough. They are promising here. Now they are paying also. They have paid this money to you in two installments. They paid in the year 8-9, they paid you first installment of rupees 5 lakh. In the year 9-10, they paid you balance of rupees 10 lakh. And that is where the story gets over. First concept is, do we understand the meaning of compulsory acquisition? Whenever I am holder of immovable property, whether land or building, government can take away my property for development purposes, for making metro, monorail, bus stop, railway station, anything. When they take away property, they cannot just take it away. In return, they will give me compensation. Compensation. Hello? And that compensation is going to act as selling price of my asset. Do you agree with this? This is going to be considered as taxable transfer because have I voluntarily given my asset to the government? No. Voluntarily exchanged? No. But this is a separate point. Compulsory acquisition has to be a taxable transfer because government is going to pay you and government has paid you in the story. This is going to serve as act as your sale consideration. Sale consideration? Compulsory acquisition will be considered as a taxable transfer to trigger capital gain and the compensation will be considered as your sale consideration. Is the transaction understood? What is the meaning of compulsory acquisition? Because now I have to teach you tax treatment. We will be learning tax treatment year by year chronologically. See, if we start thinking, sir, what about this? Sir, what about this? What about this? You have to do it one thing at a time. You did not do foundation inter final together. You're doing one thing at a time. One at a time. No? One by one, we will learn tax treatment of this transaction. Finished. Then this transaction. Finished. Then this transaction. Then this transaction. In any case, do you observe in the entire story there are 4 financial years? 4 transactions. Purchase, compulsory acquisition, first installment, balance installment. If I teach you tax treatment of these 4 transactions year by year chronologically, so tax treatment is over. Understood? Yes, sometimes there can be an additional part in the story. Sir, how? Supposingly you are that person whose property is compulsorily acquired. How much compensation you are getting?
Exactly.
Which is 15 times of your purchase price. But then it's been quite a few years since you purchased. Option 1, you are happy, sir. No, 15 lakh is good enough, sir. You are happy. So take this 15 in installments and get lost. But will there be some people who are dissatisfied with the amount? They feel, sir, agreed that compared to my cost, it is a very big amount, but today's inflation will not enable me to acquire another property at the same price. Ultimately, with this money, you are taking away my property, so I will go in the neighboring building 2 lanes away, wherever compulsory acquisition is not happening. With this money, will I be able to take property? Sometimes the answer is no. So, as a citizen, you have the right to file a case against this government. You can't say that don't take my property, that you don't have the right. But you can file a case for, guess karna, extra amount of compensation. So there will be 2 types of people. One who files the case and gets extra compensation. That means extra selling price. Hello? Or option 2, somebody who is happy with this much amount. Bola, no sir, 15 lakh is good enough. So that story is to over no yaar. If by chance you file a case for extra compensation, I will tell you that tax treatment separately by creating part 2 of the story. But let us assume part 2 later. Part 1 may let us assume that the character here is happy, Mr. X, with the amount of compensation received. He does not desire, he is not asking for any extra compensation. So will the story get over here? What are the 4 transactions that have taken place in this story chronologically, one after the other? One after the other. First, the purchase. Second, the compulsory acquisition, which government has the right, and that is the most important thing to understand. Meaning is clear. And then the 2 more transactions of getting the money into installments. I have to just simply teach you the tax treatment of this whole story one at a time. After this story gets over, yes, I will create the part 2 for you. Where what will we do, bro? Bro, what will we do in part 2? Seek enhanced compensation. Correct hai? Everyone? Fantastic. So, ladies and gentlemen, let us understand. 4 events. I have one request. See, either you have the story in front of you. Either you learn the story or save this photograph in your mind. Purchase, compulsory acquisition, first installment, second installment. Because these events ka tax treatment I am teaching. So, once I go in the flow, I ask you, what is the first event? Okay, done. Then what is the next event? Okay, done. Then what is the next event? So, you should be aware of the flow of the story in the example here. Are you clear? Quick recap. What is the first thing that happened? Purchase in the year 0102. Second thing that happened? Compulsory acquisition in the year 0506. Third thing that happened? First installment in the year 89. And then balance installment in the year 910 is the same thing that we will learn year after the year chronologically. If I teach you tax treatment of 4 financial years, then tax treatment is over. Let us start one at a time, one by one, simple. First event that took place in the year 0102. What is that event? Purchase year. What do you think should be the capital gain of this year? No capital gain. Why? No capital gain, as this is year of, but just I'll use a better word than you, and I have told you to use this word. This is year of acquisition. Capital gain cannot arise in the year of acquisition. Capital gain, if any, will arise in year of transfer. Correct hai? Now let's go to, see, do you realize 4 years I have to teach? You're thinking all of them together, so you will be confused. You think about them one at a time in chronological order. So you will not realize by the end how easy it becomes for you. Let's see, what do we have as the second year? Which is the second year? Year 5, 6. And my discussion here in 5, 6 will prove to all of you that in capital gain you don't have to memorize. In capital gain you have to understand things. In capital gain you just have to use common sense. Capital gain is not that chapter which requires memory power. Salary is for perquisite values. PGBP is what are the businesses in 35 AD? What is the rate of which block? Capital gain does not require memory power. When we say does not require memory power, so you only told no, so I did not learn section 45. Sir, you only said no, so I did not learn capital asset ka meaning. When I say memory power, literally you don't have to learn every section by heart. You just have to use your common sense. And tell me what happened in 5, 6. Compulsory acquisition happened. You all know the meaning of compulsory acquisition. Government has the right to take away your property. That is the meaning of compulsory acquisition. Correct? And don't worry, they are not going to tell you to sleep on the footpath, because in return they are going to give you compensation. So compulsory acquisition took place. Is that a TT? Is that a TT? Yes. So if I ask you, has a TT taken place? The answer is yes. Because compulsory acquisition is a TT. If this has happened, means this has happened. No? Is there a taxable transfer in 5-6? Yes, because compulsory acquisition is a taxable transfer. Everyone is with me? Has capital gain arisen? Think about it. Think about it. Or let me ask you like this. When does capital gain arise? When does capital gain arise? When it is long-term capital asset. So short-term there is no capital gain. There is no concept of short-term capital gain. When does capital gain arise? Not when does long-term arise. When does capital gain arise? When there is capital asset and taxable transfer. Capital asset and taxable transfer. Is this a capital asset? Is this a capital asset? A personal house, a personal but immovable. Is this a capital asset? Yes. Is this a taxable transfer? Yes. Has the combo taken place? Yes. Has capital gain arisen? Yes. 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 Has capital gain arisen? Yes. Has capital gain arisen? Yes. 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 But it will not be taxable एक मिनट, exempt नहीं, हाँ, it's not exempt. It will not be taxable right now. It has arisen का answer is yes, because capital asset taxable transfer. Capital asset taxable transfer. Has capital gain arisen? Yes. Has capital gain arisen? Yes. Will it be taxable? No. 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 Anyone wants to try the logic of this? I have not received anything. Please understand. Where have I received my compensation later? 8, 9. Think about it. Think about it. Supposingly I make the capital gain taxable right now. Supposingly I make it taxable. So do you understand my sale consideration will be 15 lakh? My cost of acquisition was 1 lakh. And I will give indexation. Tell me reason. Because this is a 5/6. 5/6 is before 23rd July 24. Check on your calendar. Correct or no? So let us assume that between 0102 and 5/6 with indexation, supposingly it has become 2 lakh. It is not like that, but assume cost was 1 lakh, index cost is 2 lakh. So what is my LTCG? 13 lakh. In 5/6, what was the rate of tax on LTCG? 20%. So if I apply 20% on my 13 lakh, I will get tax liability of, you understand? You understand that if capital gain becomes taxable right now, I will have to pay tax liability of, where will you pay it from? Huh? You don't have a single rupee of compensation received in hand. You have brain. If I have not received a single rupee, how will I pay tax? I agree that full 15 lakh is not tax liability. A portion of 15 lakh is my tax, but I don't have money, no. So how will I pay tax? And therefore, am I saying capital gain is not taxable? Is capital gain taxable? Yes, it is just not taxable right now. Right now, we don't have to pay tax, and you understood the logic. Okay, ladies and gentlemen, let me see how much you've understood. Is this capital gain one day going to result in tax liability? Want to guess which is that one day going to be? Whenever we receive our compensation, that day we will have to pay tax. That day we will have to pay tax. Whenever we receive our compensation, that day we will have to pay tax. Do you understand? Everyone? So what happened in 5/6? What is the transaction that has taken place in 5/6? Compulsory acquisition. Is that a TT? Yes. Is that CG? Has capital gain arisen? Yes. 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 Do I have to pay tax? No. 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 I say capital gain has arisen because capital asset taxable transfer. But I say there is no tax to be paid because I don't have money. Make sense? To answer these questions, and even if I am asking again and again, you have to still answer. Has capital gain arisen? Yes. Do I have to pay tax? Right now, do I have to pay tax? No. Has capital gain arisen? Yes. Right now, do I have to pay tax? No. Capital gain? Capital gain? Yes. Tax payable? No. Capital gain? Yes. Finally, do I have to pay tax right now? Then why you are doing time pass, sir? Capital gain has arisen. If tax is not payable, then why are you doing this time pass with us? Tax is finally not payable. Currently, we will pay tax only when we receive compensation. So, end of the day, the conclusion is, right now, I don't have to pay any. Then why are you wasting my time in saying arisen? That way, don't you think 5/6 appears to have as such no importance in calculation? Because I am not doing the calculation of 15 lakh minus cost into 20. I am not doing it. I will do that calculation when? 8, 9. When I receive compensation in future. So effectively right now in my NTTI, I don't have to write anything. Right now in my tax liability, nothing is going to come. Then why are you wasting my time by again and again saying arisen? While tax is not payable in 5/6, please pay attention. 5/6 is going to play a very, very important role in this story despite there being no liability. After this event that took place in 5/6, do you understand that you don't have your capital asset anymore? That means this 5-6 wala year will mark end of your holding period. Do we have to decide an asset is latka or satka? Latka will give latsag and satka will give satsag. I will pay tax later. By the way, when will I pay tax? Whenever I get money. 8-9 is an example. So correct answer is actually receipt basis. But the holding period is this much only. Long term, short term will depend on this much only. If I buy in 1-2 and compulsory acquisition took place in 2-3, it will be considered as short term even if money comes later. Immunity is being granted only from tax liability. Your capital gain has arisen. Your story is over here. While I am not paying tax in 5-6, 5-6 has immense importance. This will mark end of my holding period. Chalo, even if I stop at this much, is it still a long-term asset? Property, no. Earlier also was 24 and after amendment is also 24. Think about it. Before amendment, immovable property was in 24. After amendment, everything other than listed is in 24. This is clearly more than 24. Even if I say end holding period here, is it still a long-term asset? Is it still long-term capital gain? There is one more thing that will stop here. You want to guess? This year will mark end of indexation. By the way, till this year, the indexation was allowed. Hello? Till this year, it was allowed, no? In this example only, we will be paying tax in 8, 9, 9, 10, wherever we receive money. We are postponing your tax payable, but your holding period is over. That means your indexation is also over. Whenever we calculate ICAI, what do? We take our cost. We multiply by CII of transfer year, divide by acquisition year. Chalo, divide to 0102 because it is purchase year. Purchase year, 100. Transfer year. We will pay tax when we get money. But this is not my transfer year. My transfer year is this. Because this is taxable transfer. Taxable transfer is compulsory acquisition. We are postponing your liability to pay tax. But has the capital gain arisen? Yes. That means has taxable transfer taken place? Yes. The indexation will come. And by the way, now understand. Indexation that way appears to be removed except at one place. Which is that one place for which you will be doing indexation? Tax calculation on immovable property purchased before 23rd July for resident individual insurance. No, sir. If you ever get an exam question on compulsory acquisition, you will have to do indexation on that capital gain calculation also. Not just tax calculation, but also capital gain. You know why? Please understand. Is it possible that compulsory acquisition took place here? And compensation I am getting on 31st March 25. That means tax I will pay now because money received now. That only we are saying, no, receipt basis. So tax I will pay here. But transfer took place here. Indexation is not available on transfers that have taken place from 23rd. Any compulsory acquisition which has taken place on 22 July or earlier, any year, 5-6, was eligible for indexation. We are postponing tax. But that calculation will have indexation till the date of compulsory acquisition. So will there be indexation in these cases? Even now, will there be indexation in these cases? Means indexation is not going anywhere. All students always will have to be taught indexation like a normal concept. But my relaxation will be only in question number 3. What? Sale minus cost into 12.5%. Then still I will have to tell them. After removal of indexation, certain tax calculations you can still do at earlier 20. Are you understanding? So, what happened in 5-6? Compulsory acquisition. Is that a taxable transfer? Yes. Has capital gain arisen? Yes, yes, yes. Let's pay tax. No. Why? I don't have money. So yes, we will take tax from you when you receive. We are postponing tax collection from 5/6 to 8, 9, 9, 10, maybe whenever you get your compensation. Matlab from the year of compulsory acquisition to the year of receipt. We are postponing tax collection. But your holding period and indexation are over. You are not going to get indexation of this much period. Holding period, indexation. Holding period, indexation. Pay tax year, but holding period and indexation will get over. So final conclusion is, am I paying any tax in 5/6? Yeah, no. Am I paying any tax in 5/6? No. That means 5/6 ka any relevance? What? End of holding period, end of indexation. End of holding period, end of indexation. You understood, bro? Everyone? मजा आया? Everyone? Pakka? Fantastic. So this takes us to the next year in the story. Like this, we had to complete 4 years, no, bro? Which is the next year in the story? 8, 9. What happened in this year? First installment. The total promised was, out of that 15 you have received. One thing is for sure, that now that capital gain which earlier you not paid tax, you will have to pay tax. If you have to pay tax, so will you be doing sale consideration? Minus, bro, it can be kawa, or now you know, it appears that it is deleted, but it is going to be there. It is going to be there for tax calculation, that to take. But in the case like this, believe me, transfer has taken place in 5/6. So till 5/6 we will give indexation. So can I say we will take your cost? Now what was your cost? 1 lakh. Divide by cost inflation index of the year of acquisition, that is 0102, and multiply by cost inflation index of the most important aspect of this concept is this: highest number of mistakes are made in this end of holding period, end of indexation, end of holding period, end of indexation. Tax payment is postponed to 8, 9, but holding period and indexation over. ये clear है? This will become what? My ICAI. This will become my capital gain, which is taxable, on which I have to pay tax in the year 8, 9. But do you realize whatever ICAI explanation I have done here is basically this only in theory? This that I have written in theory in the year 5, 6, I have explained numerically here. Hello? Correct है ना? Correct है? My question today for you is, what will I take in the sale consideration? Let me explain my question to you. You never know, you may get an offer. Let me explain my question. You all understood the cost part. You all understood my cost was 1 lakh. I have indexed it. I have indexed it only till 5, 6. This part I am not explaining in 8, 9. This part I have already explained here. Only presentation is coming here. End of holding period, end of indexation. Now let's talk about sale consideration. The total promised by the government is 15 lakh. Out of that, right now I have received 5 lakh. Even if I receive 5 lakh, I have to take sale consideration. How much will I take? 5 lakh, 15 lakh, 10 lakh, or none of them? Let me give you 50-50 lifeline voluntarily. 10 lakh can't be the answer. 5 has to come. Question is, with 5 will 10 also come? And none of them is not the answer. So the only two options that I give you here, 5 lakh or 15 lakh. Do you understand the question? Why the two options? Total is 15. I have received 5. 5 or 15. You understand the question? Do you understand the question? Huh. You were saying first. Say kya? How?
Because of the acquisition cost, sorry, sale consideration is 15 lakhs.
I have received only 5 lakhs. So you are making a mistake. You are saying paisa diya 15. Paisa received is not 15. Money received right now is 5. You still stick to your answer. Why?
क्योंकि वो लोगों को एज ए कंसिडरेशन मिलने वाला है, भले ही आगे मिले, but उसका cost is a consideration. And that
Not convincing enough.
Sir, cost of acquisition.
Answer क्या है? You are explaining what? How would I know what you are explaining? 15. Received only 5. Even how? I see more people saying 15. I expected more people to say. I'm not saying which one is correct right now. But no one is saying 5 lakh. No. No one. Well, let me remind you, you've received only 5 lakh. Still no one wants to say. Then see if 5 lakh turns out to be the correct answer, no. Then don't say, sir, I was going to say that only, sir. नहीं अच्छा बोल now say what?
Because index cost of acquisition हम लोगों ने पूरे प्रॉपर्टी रहेगा तो पूरा प्रॉपर्टी का वैल्यू हम लोग ले रहे हैं सेलिंग प्राइस
Value.
इंडेक्स कॉस्ट
Index cost of acquisition.
पूरा वैल्यू का ले रहे हैं और हम लोग प्रॉफिट भी तो पूरा नहीं करना चाहिए सॉरी सेल भी तो पूरा वैल्यू का ही लेना चाहिए हम लोग सेल कंसीडर
I did not give any offer. You should have first asked, sir, offer क्या You should not be saying on the face like that.
कंफ्यूज करके ऑफर निकालेंगे
Right answer दिया फिर भी confuse करके निकाल.
No. Even if I do that, you have to be confident. No, anyone who is giving the right answer, I try to confuse. I am checking your confidence. See, he said capital gain will be for the shareholder. I tried to confuse. He got confused. What do I do? He could have given the correct answer. That I will always do. But no one directly says, nahi cheva. No one, huh? Irrespective of caste, community, creed, religion, or gender. No one says like that. Full compensation, even if partly received, which in our example is rupees. Now, sir, why 15 lakh? Sir, understand the following reasons. Reason number 1. Your capital gain took place in 5-6, bro. We could have taxed you that time only. So we, had some pity. Okay, poor guy does not have money. How will you pay tax? So we postponed. You received only 5 lakh. Bro, full 15 is not your tax liability. 5 lakh is sufficient to pay tax. That's one reason. But the counter to which some students give is, sir, but 5 lakh is sufficient. What if he receives only 5 rupees? Still, you are asking me to take full 15 lakh and 5 lakh is not sufficient. Correct? Eh? I am saying what? 1 rupee also you receive, you have to take full. But sir, 1 rupee is not sufficient to pay tax. No. So let me give 2-3 reasons in counter of that. One, you are mentally thinking, sir, what if I get only 5 rupees? No one gives 5 rupees. If you are getting 5 rupees, don't take it. Theoretically, you can create any example. Sir, what if I get only 1 rupee? But you don't get only 1 rupee. When you will get, the first installment will be good enough to cover your tax. Pehla reason. Second reason, please understand that compulsory acquisition is always done by state governments. They take over the land. You know why this bullet train or this Mumbai-Delhi highway takes time? Because the land in respective states has to be taken by the respective state government and handed over to the central government. The state government ka negotiation takes time. So what is happening? The compensation is being paid by state government. Still, income tax central government is postponing. See, central government can always say, it is your problem with your state government. Your capital gain has come here. We want tax here. Still, central government is postponing. So, we have postponed your tax collection from 5, 6 to 8. Is in itself a favor that we are doing on you. Don't expect more favors. And last, most important and the most hard-hitting and the most convincing reason for those who are still not convinced. Have you taken this in proportion of 5 by 15? No. Are you taking full cost? Full cost. If cost is full, then sales has to be full. You have not taken cost in proportion of the amount that you have received. If cost is full, then selling price also has to be full. Is the most relevant reason. But this is that reason which I expect last from students. You directly gave that reason. But you did not give all the reasons, no, so disqualified. Anybody giving all the reasons is eligible. You directly give what reason? Sir, cost full. So selling price also full. Or let me put it this way in front of you. Compulsory acquisition is taxable when you get your first installment. Arises in the year of compulsory acquisition, but pay tax in the year of first installment. Taxable in the year of first installment. And in the act, how they have written it, if you want to know the act part. Compulsory acquisition is taxable in the year in which any part of the compensation is received. What do they say? Any part. Any part matlab first installment. Or if I have to make it even easier in my language, pay tax on full amount even if you receive one. You receive first rupee of compensation, you have to pay tax on entire amount. First installment, fully taxable. Correct hai? Story is not over, bro. Part 2 of the story will be created later. Hey, bro. Dissatisfied people. Satisfied people ka story is not over because there is one more year. What have you done in this year? You have received your balance amount of 10 lakh. Open your bank statement and check in your bank account 10 lakh rupee has come. 10 lakh, 10 lakh. So we will have to pay tax on. Kya no? You already paid tax. Where? I did not give you the tax treatment. You gave me the tax treatment. This is capital gains. If you understand it, you already know the law even before being taught. We want to create an atmosphere, especially in capital gain. I don't have to teach you. You know it by yourself. Already tax. Like 5, 6, why they did not take tax? You did not have money. 8, 9, why they are taking tax on full amount? Because cost also you are taking. Answer, you are giving, reason also you are giving. Believe me, I tried to again and again say 5 lakh, no, because only 5 lakh is received. But most of you all, in fact, none of you all said 5 lakh. Everyone stuck to the answer of 15 lakh. This is capital. You understand it, it is the easiest chapter. You try to memorize or learn it, it is the toughest chapter. Bro, clear. So, ladies and gentlemen, what have we studied in part 1 of compulsory acquisition? First of all, are we clear about the meaning of compulsory acquisition? Is compulsory acquisition a taxable transfer? Yes. So, has capital gain arisen? Yes. Will we pay tax? No. Tax will be paid in the year of first installment. Then year of compulsory acquisition, any relevance? Yes. What, sir? End of holding period. End of indexation. Pay tax in the year of first installment on the full amount, even if partly received. And balance installment, no need to pay. Correct? Hai? Let's summarize whatever we have studied. What have we studied? Compulsory acquisition equal to TT. What is TT? Therefore, CG. You have to understand this language. Huh? If I start writing full sentences, then I have given you the textbook. Study from that. Why we write it here in simple language? This is handwritten book. No, this is what I do in that handwritten book of CFA. But provided you are comfortable with this language. So as a student, if you come and approach me, sir, I want to buy that book. Where can or how can I? Sir, first understand, are you comfortable with this language? Because that book ka orientation is to make the complicated theory easy by using a language like this. Compulsory acquisition is a taxable transfer, therefore capital gain has arisen. That sentence has been converted into sign language. My question to you is, as a CA intermediate student, somebody who is going to give exam in English medium, if I write a statement like this, can I expect you to convert it into a grammatical statement with words? Because in your exam, you cannot write compulsory acquisition tick, TT tick, CG tick, otherwise paper checker will do cross. You can't be writing tick. You have to write statements. But can I expect you to write the statement? So then your quick revision will be very easy from that book. That is not the language that we use in exam. That's a revision book. That is a book which will help your revision be very fast. If you are able to convert it, then nothing like that. So do you understand compulsory acquisition as a taxable transfer? Therefore, capital gain has arisen. But taxable Later. Later when? We'll write that. So is there any relevance of this year? While it is taxable later, it is still end of holding period end. Is that correct? It is still end of holding period and indexation. Taxable in which year? In year of first installment. In fact, let me specify this. Full CG taxable in the year of first installment. Because something will be taxable when you get. So we have to be clear, full 15 lakh. And last, no tax at subsequent, that is balance installment. Is that clear? Everyone? Hello? Akka? This is summary of first part of the story of compulsory acquisition. But this story can sometimes have a part 2 if the assessee is aggrieved. So you can't be aggrieved with compulsory acquisition. You don't have the choice. Maximum you can be aggrieved with the amount of compensation that is being paid. You are not happy with 15 lakh. Matlab, anybody who is happy with 15 lakh, your story is over. This part 2 is applicable only for those who file a case against the government because they are not happy with the amount. So what's your option? As an assessee, you are allowed to file a case called a writ petition. What is the name of the case? Writ petition, which will be filed directly at High Court. This is not a facility that income tax law gives you. This is Article 226 of the Constitution of India. Constitution of India says, if ever your fundamental rights are violated, listen to this carefully. If you feel somebody is violating your fundamental right to equality, right to justice, right to freedom of expression, right to information, right to education, fundamental rights given by Constitution, you can directly tell the High Court that somebody is violating. For example, your right to freedom. Supposingly there is a professor who is taking 4-hour lecture without giving any break. I am not that. Why are you laughing at me? I have given you a break in every lecture that I have taken. Maybe except the first lecture because we did not study only. So that is violation of your right to freedom. No sir, door is open. But if you feel that it is injustice to you, your right to justice or right to freedom is being compromised, you can actually go and tell the High Court that sir, my sir does not give break in 4-hour lecture. Jao. Go to the High Court. Go no. वो जज है ना जज फोकल bamboo don't tell the judge that judge साहब you are not doing justice to me, कानून की किताब फाड़ दो. क्या नहीं ना bro, don't try to act smart with the judge like they show in Bollywood movies. He's the judge after all. है ना? So listen, bro, you have to be sensible. Judge will ask you, was the door locked? Professor didn't give break. No. Was the door locked? Well, so there is no violation. You were free to go. But what if I lock the room from outside and don't release you? Then you can file a writ petition. Evidence is also required. Right to equality. Anybody doing injustice to you on the grounds of religion, caste, community, you can actually go to High Court. You know, housing society is not giving NOCs on the basis of religion and food preferences. You can actually go to High Court if they are violating your fundamental rights. Here, which violation of fundamental right is taking place? I believe there is injustice being done to me. 15 lakh is insufficient. It is injustice. Injustice means violation of right to justice. I can file a case against the government at High Court. So this case will not go to any district court or session court. It is a constitutional violation, and such violations directly go to High Court. The cases so filed are known as writ petitions. Where have I gone? High Court. High Court will listen to my story. By the way, what was the compensation already given by the government? 15 lakh. But now I am trying to convince the High Court that 15 is insufficient in modern days. Okay. So High Court gave its order in the year 1780. I am taking a reasonable example where 910 to 1718, some years it will take to fight a case in High Court. High Court said that give this gentleman total compensation of 40 lakh. Talit lakh. Give this person total compensation of 40 lakh. Talit lakh. 40. Total is 40. Bro, if I ask you how much extra High Court is giving you, this in income tax language is called enhanced compensation of 25 lakh. See, understand, if the High Court makes your compensation 40, government does not have to pay you 40. Government has already paid you. This is extra only 25. Bro, not just government has paid you, you have paid tax on 15 already. So government will give you extra how much? 20. And you have brain to understand. You will pay tax extra on how much? You have the brain to understand this 25 is like extra selling price. So pay tax, but not on 40. Pay only on 25 because 15 you have already paid tax. Correct? Eh? So your original compensation was 15. But now you get enhanced compensation of 25, making it total of 40. 15 we paid tax. We'll get also 25. We'll pay tax also on 25. But here there is again one twist. When High Court decided this in the year, High Court order came when? Option 1, government has to pay you that money. So government has paid your money in the year 18. And story is over. High Court decided, government paid, story over. You have to pay tax on 25 lakh. I don't have to even explain that to you. Because 15 you have already paid tax. There is another twist here. Anyone wants to guess? Any other guess? That I will explain. Possibility I am saying. Once High Court has said pay 25, you have to pay 20. How can you pay less? And don't say pay more. Put a little pressure on your brain. See, let me explain the story. You went to High Court for extra beyond 15. High Court gave you extra 25, total 40. And government paid. That means government has accepted the High Court judgment and paid you 25. There is one more possibility. I have given a very big hint now. Surprised. You are good students. I expected you to give this answer. Late payment. So 18, 19 will change to 19, 20, 20, 21. Doesn't make a difference. I repeat. You went to High Court. High Court gave you extra 25. Government accepted the judgment and paid you extra 25. Option 2. Government has not accepted High Court order and government goes to government goes to High Court. Matlab against Bombay High Court you go to Delhi High Court. No, you go to Supreme Court. There is a court above High Court called Supreme Court. This much knowledge of judiciary you have, or you were not aware that there is one Supreme Court. So then you should have said, I repeated also, I said government has accepted, so paid. Then what is the other possibility? Government not accepted the order. Went to after Supreme Court, bro, you are happy or unhappy, you go home, go to sleep. In case it is not clear in legal terminology, understand in my terminology, Supreme Court is like your wife, you can't appeal against the order. The order is final and binding. You cannot file appeal against order of Supreme Court. Wife, you can't appeal. The order is final and binding. Is that clear? हाँ तो government goes to Supreme Court. Originally government had paid how much or decided and paid how much? 15. High Court increased it by 25 to a total of 40. And government says, sir, this is more than what we have, almost double of what we originally said. This is too much, sir. Supreme Court said, not you, not me. In between the two, Supreme Court arrived at a settlement amount. Supreme Court said, total amount you should pay 36 lakh. That means now government will pay enhanced how much? Any guesses? 21 lakh. Sir, why did I get this figure of 21 from? 15 was already paid. And Supreme Court is making total of 36. So 36 minus 15 already paid. The enhanced compensation will be 21 lakh. And now Supreme Court has given the order in say 2021 because after this order in 1718, it will take some time, no? And government has paid in 24-25. Possible hai? First of all, you have to understand these two are mutually exclusive events. This is the common part in the story. You went to High Court, and that also if you are dissatisfied. Supposingly somebody is satisfied, story is over. Dissatisfied people, this is common. After this takes place, that means that extra 25 lakh ka judgment has come. Option 1, government accepts and pays. Option 2, government does not accept and fights further. But do you understand, if the government goes for this further fight, it won't pay this. So if the government is paying, then this cannot be triggered. And if the government is fighting, then government will not pay this only. Will wait for Supreme Court order. So end of the day, you are going to get either extra amount of 25 or extra amount of 21. It is never going to be a case where you have this also and this also. If government goes to Supreme Court, then this will apply. If government does not go, then this will apply. But it will always be one of them. You understand? Tax treatment is not difficult. Story is difficult. Tax treatment is very easy. Finally, whether I get extra, this side how much? 25. Or this side? Whatever extra I get is that extra selling price. So one thing everyone has to agree, that I will have to pay tax on some capital gain due to enhanced, that is extra compensation. Think about it. On the left side, that is this side, originally I received and paid tax on 15. Now I have received extra how much? That means that extra amount that I have received is like my extra income and I have to pay tax on that extra 25. But on this side, originally I have again received and paid tax on 15. This time I have received extra how much? Then that means this time I will pay tax on. Or do you understand, the sale consideration is going to be nothing but your, because that enhanced compensation is like extra selling, whether the left side or the right side, and one of them will happen, both of them cannot happen. Correct hai? Enhanced compensation will be considered as your sale consideration. But is sale consideration capital gain? Is sale consideration capital gain? Is sale consideration capital gain? No. What is capital gain? Sale minus. Come on, ladies and gentlemen. We have to write cost here also, here also. Come on. Why? Whatever was the cost of this asset, I have already taken deduction of that cost at the time of first capital gain against 15 lakh. Selling price I am getting extra. Cost I am not incurring extra. Capital gain equal to common sense. I did not give you the answer. You are learning first time? Graduate? No. Foundation? You are learning capital gain first time? You gave the answer. Why cost will be 0? Achha, do I have to even explain that year 25 will be taxable, year 21? Whatever extra you are getting. So 15 you have already paid, that won't be taxed. Whatever extra you are getting will be taxed. Here you are getting 25, you are getting 21. And in both these cases, are you incurring any extra cost of acquisition? Whatever was original cost is already subtracted against 15 lakh. Plus cost will be 0. Correct hai? You understood? But then, is it possible that you have incurred expenses to fight the case? We call them litigation expense. See, you are getting the enhanced compensation only by fighting the case. And policy of income tax, expense incurred will be allowed as a deduction. Here you incur the expense in high court. Here you incur the expense at both places. See, who filed the case is not relevant. You incurred expense. This will become your taxable capital gain. This will become your taxable capital gain. Enhanced compensation minus litigation expenses. Enhanced compensation minus litigation expenses. In case I go to high court. If I don't go to high court, I am happy. The story is over. In case I go to high court, so enhanced compensation minus litigation expenses. Clear hai? Last 2 points here and compulsory acquisition will be over. We'll write the summary of part 2 also. Remember we wrote summary of part 1. So what are the extra points? I'll continue with the numbering of point F. Last 2 things. First, whether this side or this side, we will be paying tax on the extra amount and there is no extra cost. So 0. Only litigation ka cost we are subtracting. But when will we pay tax on that? Because original compensation we paid tax in which year? Not of compulsory acquisition, but in the year of first installment full amount. For enhanced compensation, this is the most important aspect. See, most of the answers you gave by yourself. Like for example, cost is going to be 0 or the taxable amount will be 25 or 21. All the answers you are only giving. Litigation, it did not click to you, but the moment I said, it was very easy for you to understand. Of course, there will be court expenses. But one thing that won't click to you and one thing that you have to take home, whether this side or this side, the tax has to be paid in the year of final order, in the year in which the order was passed, in the year in which the order, in the year in which the order was passed. Please understand. Everyone with me on the left side. Whose order is this? High Court. Is that final? I say yes, because we have not gone to Supreme Court. Left side we have not gone. No, here we have gone. So one thing everyone understands, that on the left side, whose order is final? High Court order is final. But on the right side, whose order is final? You don't have to see the year of receipt. You have to see which year this order was passed. On the left side, whose order is final? Which year that was passed? That means this will be taxable in the year 1780. On the right side, whose order is final? Which year the order was passed? We don't have to see the year of receipt. This will be taxable in the year 2021. In the year of final order. Capital gain will be taxable in the year of final order. Listen to this statement. See if you are able to digest it. Original compensation in year of first installment, enhanced compensation in the year of final order. Original compensation in the year of first installment, enhanced compensation in the year of final order. You understood this? Summary may I'll make you write this. Because enhanced compensation will be taxable, not the full amount, is not something that requires explanation. Cost will be 0, maybe it requires explanation, but now you understood, sir, why cost is 0. Litigation expenses, I will write, but requires no explanation. This is one thing which they have been clear about, that when High Court ka order comes, if it is final, then only pay tax. Because the moment government goes into litigation, that means your amount is not yet final. Why we make you pay tax? We will wait for Supreme Court order. But if no one goes to Supreme Court, then that order is final. Then you pay tax. Don't wait for receipt, because you already have original compensation ka money for payment of taxes. Don't wait for money. Pay tax in the year of final order. Last question. This capital gain is the amount that we have to pay tax on enhanced compensation minus litigation expenses, because cost is 0. I will have to classify this capital gain into long term or short term. I will have to classify. When I say this, some students react by saying, sir, take it. In long term, we get indexation. But here the cost is only 0. If cost is only 0, there is no question of indexation. Then Why are you wasting my time in deciding long term, short term? Then do I have to decide whether it is long term, short term? I have to decide it is long term, short term. Will I get indexation? Cost is only zero. How will I get indexation? But the rate of tax is different for this. Earlier 20, now 12.5. This is non-stock market. So 111A, 112A will not apply. Short term normal rate and long term 112. Long term fluctuated from 20 to 12.5. But short term ka rate of tax is different, no? Which rate of tax will apply will depend on whether the capital gain is long term or short term, because special rate is prescribed only for long term capital. See, stock market means there is special rate for short term also. But outside of stock market, there is special rate only of long term. So we have to decide yes or no. How to decide whether this capital gain is long term capital gain or short term capital gain? Supposingly court case. Now in this example, court case took like about 4, 5 years, 6, 7 years. Supposingly court case gets over in 4 months only. So this will be considered as long term. Because type of gain depends on type of asset. I said 99% cases you directly go from holding period to long term capital gain. No, you still get correct answer. But there will be that case where if you have not checked latka satka and directly went to type of gain, you will go wrong. The definition of long term capital gain is not holding period. The definition of long term capital gain or short term capital gain is basically the type of asset. Listen, if the asset was long term, then this original gain was long term and the new gain will also be long term. By chance asset was short term, the original gain will also be short term and new gain will also be short term. You don't have to see the quote ka duration. Oh, you have to see whether the asset is long term asset or short term asset. Type of gain depends on type of asset. If you don't know this basic point, 99% cases you will get the correct answer, but there is a case where you will be wrong if you don't know this, bro. This understood? Of course, perception matters. You want 99 or 100, I leave the choice to you. Ladies and gentlemen, 2 points very, very important. Enhanced compensation will be taxable in the year of final order. And second, long term, short term depends on type of asset. So let us summarize what we studied in part 2. Part 2 was applicable to those people who are dissatisfied. So A, B, C, D, E we have written. Bro, compulsory acquisition, but taxable later, but end of holding period indexation. Full amount will be taxable when you get your first installment, and second time, next time you get money, there will be no tax. Now let's talk about what have we studied in enhanced compensation. Enhanced compensation will be taxable in year of final order, irrespective of year of payment. Enhanced compensation will be taxable in the year of final order, irrespective of year of payment. Receipt is not relevant. Original compensation receipt basis. Enhanced compensation final order. Sale consideration equal to enhanced compensation. Kawa equal to nil. Only deduction will be litigation expense. Correct hai? And long term or short term will depend on type of asset is the summary. If you have these 8 points with you, the full story you don't have to go through again and again. These 8 points will act as summary of the concept of compulsory acquisition. Ladies and gentlemen, boys and girls, we have just now completed a concept called compulsory acquisition. If you are the holder of immovable property, government has the right to compulsorily acquire it for the purpose of development. You can't say no. Maximum you can fight for amount, but you can't say no. Is compulsory acquisition a taxable transfer? Yes. Has capital gain arisen? Yes. Yes. Let's pay tax. No. Tax will be payable when you receive your first installment. Tax will be payable when you receive your first installment. Full capital gain will be taxable even if partly received. because cost also is full, subsequent installment, no tax. If you are happy, your tax statement is over. If you are dissatisfied, first you file a case. Then see where case got over, at High Court or it can go further. Wherever case gets over, that is your year of taxable. If somebody goes to Supreme Court, then don't pay tax in the year of High Court order. If no one goes to Supreme Court, then taxability will come in the year of High Court order. In the year of final order, sale consideration will be enhanced compensation, cost you've already deducted, just take deduction of court expenses, litigation expenses, long term, short term, will check the type of asset. That's your summary of the concept of compulsory acquisition. Meaning and tax treatment both completed. Everyone is clear? Point number 5 of what, bro? Taxable transfer ka inclusions, conversion of capital asset into stock in trade. You know, concepts like sale, barter, they were easy. We quickly finished them in one line. But compulsory acquisition was a concept we've never heard before, so we had to spend good enough time to first understand the meaning. Then we understood the tax treatment. Here also, first we have to spend a little time to understand the meaning. Then we will of course go to the tax treatment. I have one good news, one bad news. The meaning of this concept is completely different from compulsory acquisition. There is nothing common in the meaning. This was the bad news. Now, the tax treatment is completely same. If you know the tax treatment of compulsory acquisition, you know the tax treatment of this also. Meaning fully different. Tax treatment fully easy. Fully same. We'll first focus on understanding the meaning. Let us assume you, Mr. X. This time he purchases gold. See, some variety we need, no? Gold, oh, gold, the yellow metal wala gold. In the year 0102, 4 rupees, 1 lakh. You. What great thing you did in your life? In the year 4 rupees, 1 lakh. So only changes, last time we had property, because compulsory acquisition can happen only of property. This time we have gold. Like a gold chain or gold. Personal movable asset. So capital asset, personal movable. But it falls in exceptions. It falls in jewelry. So is this a capital asset? Yes. Is this a capital asset? Yes. He purchases this gold, then goes home and sleeps. Same as Ibrahim. After 1 year, he gets up. Same as Ibrahim. After 1 year, he gets up and he sees the value of this gold has become 1,05,000. Wow, that is 5% per annum return on investment without doing anything. Without doing anything. He again goes to sleep. After 1 year, he again gets up. See, Kumkaran used to get up once in 6 months. But then Mr. X, Mr. Ibrahim gets up after 1 year. And the value of the gold has become 1,09,000. Every year the value is increasing without doing anything. He got the game here. He was like, gold is an excellent asset. What an asset this yellow metal is. Excellent returns. But I have only one piece of gold. So I am earning profit on increase in the value only of this one piece of gold. If I had lots and lots of gold, so I had to do nothing. Just buy 1 year and go off to sleep. Every year the value will keep on increasing. Today, gold business, my relatives, believe me, without doing any business also they are in profits. Even if they don't do a single rupee of transaction, they are in profits because the value of the stock is continuously increasing. And supposedly you have money, you have crores of rupees at your disposal, then you should make the investment. He decided that what I will do is, I will now just not hold one piece of gold, I will purchase lots and lots and lots of gold because I know its value keeps on increasing. And therefore, I'll just buy and keep. One day it will increase, I'll keep on selling. Again, there will be slight reduction, again I will buy. Again, there will be increase, I will sell. I will do this continuously. I am now going to start a business of trading in gold. With this one piece of gold, he got that idea. Now, of course, that one piece of gold you kept at home. When you want to do business, you will have to bring lots and lots of gold first of all. He has investment ability, lots and lots of gold, and you will have to take a shop from where you're doing your sale activity. You can't be selling gold from, you can't be doing work from home in gold business. No one will take you seriously. You need a proper showroom. So he starts a showroom. And because he is a little superstitious, Marwadi, so he told himself that the whole idea of starting this business came because of this one gold. Actually, this one piece of gold is really lucky for me. So what I will do is, as as an auspicious asset, the first stock that I will take in my shop, new shop, will be this gold. So I will take the gold, put it in a red cloth, put some kanku, some rice, wrap it in the red cloth, keep it in a plate, and take it. Hold my breath and take it from home to office. I will install that gold in my office ka safe, and then only I will purchase more gold as stock. My first stock will be this gold. Journal entry won't be difficult. In the books of the proprietorship, you can always say purchase account debit to proprietor's capital account because he is bringing the gold. And in my personal books, I can always say investment in proprietorship account debit to gold account. Investment debit because I am creating the proprietorship to gold because gold is going from my personal books to my business books. What I have typically done is I have taken this gold from home to office, home to office, home to office. I have converted my capital asset into stock in trade. I have converted my capital asset into stock in trade. This idea came to me in 5-6. So understand the story. I purchased gold as capital asset, but now I want to start the business, so I take this to my shop. That is conversion of capital asset into stock in trade. Which year I did this? Fantastic. So what have I done in this year? If you understand, take it from home to office, home to office. Correct? How much money I will get when I take my asset from home to office? How much money I will get? Nothing. Thank you for being so smart. When you take an asset from one place to another, you don't get paid for it. Whatever jewelry you are wearing on yourself, your bracelet or your earring or your chain, you bring them every day to class because they are your wearables. So people are paying you here for that. No, for taking your assets from one place to another, nobody is going to pay you. No. And obviously on that date, will there be any fair market value of the asset? There will be fair market value. Supposingly the fair market value of the gold on this date is 12 lakh. Possible? That means, can I say I had acquired an asset for 1 lakh. Over the years, the value of the asset has become 12 lakh. When it was 12 lakh, I took the asset from home to office. That is, I converted my asset from capital asset to stock in trade. Now, where is my asset lying? In office as stock. You understand? Just taking money from home to office is not going to bring any cash flow for me. Now, my asset is lying where? In office. One fine day, I am going to sell this. Supposingly, I sell this in the year 24-25. So, for rupees, say 40 lakh, this time, will there be some income? Yes. This time, will there be income? Yes, because there is actual sales that I have done. Everyone understands this is an amount on which I have not done any transaction. This was my purchase price. This was my selling price. So effectively, is this my total profit? Ignoring a value, only market value. Have I done any purchase or sale? No. So what is my pocket purchase price? 1 lakh. And what is my pocket selling price? Everyone understands this is the profit of 39 lakh. Correct? Assessee offered this full 39 lakh as business profession. Why? Because when I sell it, it is stock. And income arises at the time of sale. So at this time it is stock. Assessee offered the full amount in PGBP, showing it as stock. But AO had an objection. AO said, sir, I agree you are selling your stock, but it is not stock from here. It became stock here. So maximum that you can do is this much value you can consider as PGBP, but this much was not an increase that your stock has earned. This is an increase that your capital asset has earned. And accordingly, this much value will be classified under capital gain. This case went till Supreme Court, and can you believe this? Assessee won the case. This whole income was declared as PGBP. PGBP, assessee won the case. But whenever in our country, remember this, if assessee will win the case now, they will amend the law. In the year 1984, you were there? Pakka, anyone? Sure? I was also not there. So 1984, 41 years ago. I was not there. You think I am 41 years old? With your substances, you can think anything. No. Government amended the law and included this in the definition of taxable transfer. Think about it. If this is a taxable transfer, that means this event has to trigger capital gains. And thus government did what it wanted. This much will be capital gain and this much will be PGP. And here, please understand, there is no further year because there is no further transaction, only 3 years. Second, here there cannot be part 2 also. Sir, what if I am dissatisfied? Slap yourself, you only sold it. How can you be dissatisfied with this amount? You have sold it voluntarily you purchased voluntarily. You took it to your shop voluntarily. You sold it from your shop voluntarily. You are dissatisfied, then stand in front of the mirror and speak. Speak. Whom are you aggrieved against? Yourself. Slap yourself. Stand in front of the mirror and give bad words. Front camera is also an option. You understand? Story will get over here only in 24, 25. I have to teach you tax treatment only of 3 years. 1, 2, 5, 6, 24, 25. Story over. Story over. You understand? I have converted capital asset into stock in trade. 3 years in the story. Save the story in your brain. First year, purchase of capital asset, year 0102. Second year, conversion into stock in trade, year 0506. Third year, sold in the year 24, 25. Understood? We have to learn tax treatment. But then later, if I will do this, then everyone will make dirty faces. Till now, some people have been making, now everyone will make. I will need about 6-7 lines here for some more explanation. So I am doing tax treatment after leaving a few lines. But I have to do tax treatment of the 3 years that I have taught you. And you do them one at a time. Have you saved the story in your brain? Chronologically, one at a time. Don't put too much pressure on your brain. First year, 010. What great thing happened in this year? Are you interested in computing capital gain? No. Why no? As this is year of acquisition. Correct? Second, 5-6. What great thing happened in this year? Now see the magic. Conversion happened. Is conversion TT? So has TT happened? Yes. Is this a capital asset? A personal movable exception. Capital asset, taxable transfer. Capital asset, taxable transfer. Therefore, capital gain has arisen. Next pay tax. Sir, how do I pay tax? I just took my asset from home to. Oh, don't forget what happened here. I just took my asset from home to office. How can I pay tax? But it will not be taxable. Hey, bro, it is not exempt income. It will not be taxable right now. Logic. I just took it from home to office. No, bro. I don't have any money. You want to guess when will this be taxable? Year of sale of stock. Because that time I will get money. Right now it won't be taxable. So, do I have to pay tax? Do I have to pay tax? Right now only I am asking. 5-6 only. Do I have to pay tax? No. Has capital gain arisen? Tax. Right now tax. No. Capital gain arisen? Yes. Tax payable. Capital gain. Sir, why time pass you are doing? If tax is not payable, then capital gain arisen, not arisen does not make any difference. 5-6 ka any relevance? Yes! Guess kar. End of Sir, why? Because after this, though the asset is still with me, it is not as a capital asset. It is stock. And more importantly, end of indexation. End of holding period, end of indexation. End of holding period, end of indexation. Understood? Tax you pay later, but holding period and indexation will get over. Appears familiar? Tada! I told you, story is different. Conversion meaning is different, but tax treatment is fully same. End of holding period, end of indexation. 5-6 also over. In no time we reach the third and the last year. What happened in this year? Sale of stock. One thing is for sure, that I will have to pay the tax that I have postponed. I will have to pay tax in 24-25 on which head of income? PGBP and capital gain, both, because sale of stock attracts PGBP and the capital gain which was postponed also will be taxable. So I have to do both, bro, both. I have to do PGBP as well as capital gain. Correct? Hai? In PGBP, I will have to write selling price and cost price. In capital gain, I call them sale consideration and cost of acquisition. And I will do indexation also. If I am doing in 24-25. So indexation, yes, because transfer took place in 5-6 and 5-6 is before 23rd July. So indexation is not going anywhere. For tax calculation, yes. For compulsory acquisition, yes. For conversion cases, yes. Now I want to bring you to the story. When I purchased, it was a capital asset. So 1 lakh is cost under capital gains. Everyone agrees? When I sold, it was stock in trade. So 40 lakh is selling price under PGBP. Do you realize I have to write 4 amounts? If I write these 4 amounts, I will get my PGBP as well as my capital gains. Now, out of these 4 amounts, what is available for me in the example is 1. This is going to be actual, which in our example is 40 lakh. So no problem. And as far as this is concerned, this will also be actual. Of course, we know this, that while we will take 1 lakh and we have to index it, we will divide by cost inflation index of 0102 and multiply by cost inflation index of 24-25, 363. Will we? No, sir. We will multiply by cost inflation index of 0506, 0506, 0506. Bolo, yes or no? That means, do I have the cost? And by the way, this explanation I did already in 5-6. So, this has to be my capital gain, and after writing cost here, this will be my PGBP. Please understand, I wanted 4 amounts: selling price in PGBP capital gain, cost price in PGBP capital gain. I have selling price in PGBP because that is actual. I have cost price in capital gain because that is actual. Unfortunately, I don't have my selling price under capital gain, cost under PGBP. Selling price, cost price, selling price, cost price. These 2 amounts, unless and until I write, I won't be able to get both heads of income. From my side, the maximum hint that I can give you is these two have to be same amounts. You understand the logic? Here I will take it as plus sign. Here I will take it minus sign. So in NTTI, these two are like cancelling each other. Accordingly, my 40 lakh and 1 lakh, my 40 lakh and 1 lakh, the net profit pocket is also reflected in my computation. So one thing I can tell you, the maximum hint that I can give you, I need these two amounts. It has to be the same amount. Take a guess and you will be right. You give the answer. Fair market value on the date of conversion will be taken as selling price under capital gain. Fair market value at the time of conversion will be taken as cost price under PGBP. And logic, I acquired capital asset for 1 lakh. Everyone with me? In 5-6, I left my home with that jewelry and I sold that jewelry at 12 lakh rupees. So that is selling price of my capital gains. In fact, indexation also, everything over. Just postpone tax collection. Correct? Eh? But while I sold it for 12 lakh, I have to immediately purchase it back from the market at the same price for taking it to my shop as stock. So that same 12 lakh at which I sold it is also the 12 lakh at which I will repurchase for the purpose of PGBP. So selling price of capital gain equal to cost price of PGBP equal to fair market value at the time of conversion. Understood? This fair market value is playing double role. Think about it. This fair market value here, it is becoming sale consideration, giving you capital gain. This is your actual cost. So can I say this is becoming sale consideration in capital gain? And here to give you PGBP, this is becoming your cost price in PGBP. Do you understand the double role being played by your fair market value? And do you understand this date is going to mark end of your holding period and indexation? Is that clear? So ladies and gentlemen, conversion is a taxable transfer. Has capital gain arisen? Yes, but we will pay tax in the year of sale of stock. So is there any relevance of the conversion here? What? End of holding period and end of indexation. Everyone is clear? And then in the year of sale of stock, we'll pay tax on PGBP as well as capital gain. One thing I would like to clarify. Now here you sell your stock on cash or on credit, that is your problem. Huh? Supposingly here you sell your stock on credit basis. You can't say, sir, I don't have money. Now selling in credit is your choice. That means maybe you have money to invest. Maybe you have working capital. Use that working capital to pay tax. Otherwise, why you are selling on credit? You can't be not having funds and still giving credit to people. No. You've done estimation of working capital in financial management. So you should be having working capital, then only you are doing. So you selling cash or credit, that's your problem. Is that clear? We will make the summary. If you have understood, this is your concept of conversion. Conversion is TT. Therefore, has CG arisen? Yes. So let's pay tax, but not taxable immediately. When will it be? Or let me put it this way: it will be taxable in year of sale of stock. Then what is the relevance of the conversion year? End of holding period and indexation. Finally, in the year of sale of stock, what income is going to arise? PGBP as well as capital gain. No. Selling price in PGBP and cost price in capital gain will be your actual amount. Actual selling price, actual cost price. But cost in PGBP and sale consideration in capital gain is going to be your fair market value at the time of conversion. Understood the concept? Concept clear hai? Everyone, I made you leave some lines. This concept is over. 0.5 is over. Taxable transfer is over. But we have to fill those lines. I am going to teach you a concept of PGBP chapter now. Not because I had forgotten, but because you will understand now. Everyone with me? Sometimes the transaction can be a reverse of the above transaction. Is it possible that I am doing some business of gold, business of property? Now I stop that business, but continue to hold some of my stock in the form of an investment. That means this time I have converted my stock in trade into my capital asset. Correct? Hai? One more time, there is going to be some fair market value here. I must have acquired the asset as stock in trade, and when I will sell my asset as capital asset, that means this portion this time will be considered as PGBP. This portion this time will be considered as capital gain. This FMB is again going to play a double role. It is going to become selling price in PGBP and it is going to become cost of acquisition in capital gain, and this date of conversion is going to be start of this time your holding period and indexation, because this is the date from which you are holding your asset in the form of a capital asset. This is the date from which your asset has become a capital asset. Do you understand? It is exactly a mirror transaction. Conversion of capital asset into stock in trade has now become conversion of stock in trade into capital asset. Everyone is clear on this? Ladies and gentlemen, boys and girls, deviyo sajjano mitro, congratulations, badhai ho, abhinandan, because that marks completion of your taxable transfer. Capital asset done, taxable transfer done. This brings us to the third thing, and if we finish this, capital gain over. Have you observed every head of income till now has given us a particular format of solving? Every head will be solved in that format. This is also going to be solved in that particular format. First step that we are going to be doing is going to compute. See, you have to go beyond that. Grow up. You'll eat food by yourself. Anyone feeds you at home? खाना रे बा. नहीं, generally I'm asking. No. I have seen some people making other people eat in class. Not that I am, sir, how much gossip you want. But then if I am coming to class before time, installing my system, and you are enjoying your break at that time, I can't be closing my eyes and putting the cables of my laptop. If my eyes are open, I can see what is happening. People are feeding each other. Wow. I have not seen this kind of love before in life. Fantastic. But in real life, you have to behave like grown-ups. I have told you in the past also that this is probably the last time in your life where you are being treated with love and care. Next time, maybe after today, directly when you get married and your spouse, if at all, gives you that love and care. But between today and that day, a very, very cruel atmosphere in your life is waiting for you. No one is going to be soft to you. No one. You have to do things by yourself and you have to grow up. You no longer have to do SCCOA. That is only simple definition of capital gain. The real complicated calculation is this. First thing that we will do is compute something called GSC. Like we did in house property GAV, here we will do GSC, gross sale consideration. Against this, we will be subtracting certain expenses known as transfer expense. Generally, if we sell an asset, we sometimes have to pay brokerage, etc. These are expenses which are necessary to give effect to our transfer. And we know the basic principle of income tax. Take tax on net basis. So accordingly, we will be having what? Our net sale consideration, that is NSC. Like there we did GAB, municipal taxes, NAV. Here we have sale consideration, gross sale consideration, transfer expense, net sale consideration. From net sale consideration, we will get deduction. Till now you were deducting kawa, but now you know that it can either be kawa or sometimes it can be index cost of acquisition, about which following things, if you understand, if your sale date is till 22 July, then so you have to take it. If your date is after that, then still for the purpose of tax calculation in certain cases you have to take it. Income will be sale minus cost only, but in tax. And even if it is after that, in cases like compulsory acquisition and conversion of capital asset into stock in trade, where transfer took place in a past year, but postponement happened and then we are taking tax in this year, so we still have to do indexation till that year. So we have to take index cost of acquisition. Correct? That means, can I say we have kawa? Kawa. Dekho, people feel lonely in life. Okay? So everyone wants some companion. And kawa won't come alone. Kawa will along with him bring kawi, which can sometimes also be I kawi, kawi or I kawi. See, you know the full form of the initial alphabets, cost of or index cost of, but what is this word? We call it the cost of. Bro, shame on you, bro. Even Kawa has Kawi, bro. You CA students, you are single. Cost of improvement, and for indexation, the same amendment related explanation. So let me explain for a moment what is cost of improvement. If you buy an asset, say for example, a house, that is your cost of acquisition. It has a certain sale value. But by chance, if you add an extra floor, if you add an extra room, will that enhance your sales value? Correct? The cost of adding the extra floor or the extra room is not a part of Kawa because that is acquisition. And this was done after acquisition. But everyone agrees that this cost is necessary to get extra sales value. So should we give deduction of that cost of extra floor? But that can't be given as deduction under Kawa. So we will give deduction under cost of improvement. Even Kawa has Kawi, bro. You all are single. CA students. Together it will make your total deduction of cost. That is Kawa, Kawi. Kawa, Kawi. Same color, Kawa. This will give you something called your gross capital gain. Not the capital gain on which you have to pay tax. This is your gross amount of capital gain. From this, you are eligible for some exemption. Somewhere in the middle of today's lecture, we were discussing about this. You transfer one asset and with that money, you purchase another asset. So they are willing to give you some exemptions. So you take those exemptions. The exemptions start from section 54. They go up to section 54 GB, but only some of them are in inter, not all of them are in inter. So we will do whichever is there in inter. And after taking this exemption, what we get is, ladies and gentlemen, our taxable capital gain. This you observe carefully, bro. This is the rest of the chapter. Typically, what we did in house property, give the heading GAV. Here we'll give the heading GSC, learn in detail. Then give the heading transfer expense, learn in detail. NSC, learn in detail. Kawa learn, Kawi learn, exemption learn, chapter 1. In house property, after we finished GAV, municipal tax, NAV, standard deduction, interest deduction, we had some 3-4 points to be noted, like co-owners, like pre-construction interest, recovery of unrealized and arrears of rent. Here there is only one concept. See, this is the normal calculation, but if the same capital gain happens on a stock market, so how will my calculation change? Calculation is same. So finish ordinary calculation of all the assets. Finally, if the same thing happens on stock market, how can my calculation change? Everyone is understanding? So if we finish this and stock market, we get done with our syllabus. Syllabus will get, we will get done with our capital. You're not even correcting, but sir, we trust you so blindly that you speak anything. We are okay with that. Finish capital gain and tell us, ho gaya, go. Have fun, enjoy your life. No problem. We believe in you. Don't trust blindly. Huh? Learn to question. Which does not mean that you go and talk to parents at home like that. No, my sir told me to question. 2 tight slaps you will get at home, and I will also get. Your parents will invite me, sir, can you come home for tea? And so you know where you should question, where you should not. Ladies and gentlemen, we have to finish this and we will get done with our chapter capital gains. Is that clear? So we are done with capital asset, taxable transfer. We will continue in the next class on Monday. Monday's lecture, we will start with gross sale consideration. 7:45 a.m. Huh? Early. And take it as challenge. Try coming late. Try. Then see what I do to you. Okay. Only for one day. 7:45 a.m.